25 we will have it. Of course, if science keeps proving that we are right, but our timelines is this: in the flu season of 25 we'll have a combination vaccine.
That was the Pfizer CEO, Albert Bourla, speaking to Bloomberg's David Weston, talking COVID vaccines, flu shots, and much beyond. We'll stay with the pharmaceuticals story. The UK pharma giant GSK has raised its guidance for the second time this year as demand surges for its breakthrough vaccine to prevent a common respiratory virus. Joining us now is Bloomberg's Chloe Mealy, who follows the pharmaceutical sector on the earnings stories out this morning and can take us through some of the news lines. Good to see you, Chloe. Thanks for joining us. So what's driven GSK's third quarter performance and this raise in the outlook?
So yes, this morning GSK in its third quarter update raised its outlook for the year for EPS, profit and revenue, and its adjusted EPS also beat consensus estimates. So overall, really strong quarter for GSK, and a lot of that is driven by, as you said, its adult RSV vaccine. So that launched in August in the US, and in the quarter it had 700 million pounds in sales, which is about double what analysts had expected. And GSK said that it was anticipating about 1 billion pounds in sales this year. It also means that the vaccine segment is becoming more and more important for GSK, and it's well ahead of.
Okay, so that was Arexvy, one of the launch drugs in focus. What else is in the pipeline then for GSK?
So GSK is currently kind of building out its pipeline for new treatments after it split its pharma business from its consumer unit, Alien, which is reporting tomorrow actually, and it's the CEO Emma Walmsley is facing a bit of pressure from investors to build out new treatments, especially because it has lost exclusivity on some of its key products.
Let's move on to other matters within the pharma space. Bayer has been hit by a $332 million verdict against it. What is next in the litigation process for the weed killer cases? This is one of a number.
Yes. So it is the third trial loss this month for Bayer, and before that, it had actually won nine cases before, and it has set aside about $16 billion. Reserved aside for to pay out those litigation money. So there's the risk that it will have to kind of use most or all of that money set aside.
Yeah, and so for investors that might be what matters. If they provided 16 billion, how close to that number it gets. We should point out that Bayer is appealing this decision, and they have also said that this weed killer doesn't pose any cancer risk. This is what they've said for us. They disagree with the jury's verdict and believe they have strong arguments on appeal to get this unfounded verdict overturned. So that's the Bayer view there. Thank you, Chloe, for bringing us those stories. Bloomberg's Chloe Mealy with the latest on the pharmaceuticals sector. We've heard a lot from pharma then when it comes to Pfizer, GSK, and that Bayer story, bringing all of that together for us. Coming up on the programme, hedge funds are turbocharging volatility in the US government bond market. We will dive deeper into our big take story as we've seen the markets as a whole really preoccupied by what's going on at the long end of the Treasury market curve. What have hedge funds been doing? How are they positioned as we head towards the end of the year? What do they expect to see next? We'll get that big take story for you shortly. This is Bloomberg.
been so used to the fact that every time there's a problem, central banks come and ease. This has been the kind of playbook, you know, throughout my career, before that, after I left. Now we're in a very different environment. Central banks actually have to create a recession, in essence, to get back to price stability. So it's a complete reversal of the modus operandi, in a sense, of central banks as they've known it for the last several decades. So that's why it's not so much that they're getting something wrong. They've now acknowledged that there is this trade-off, these costs to pay, but it's a completely different way of thinking about central banks, and it's a different role. Another way to put it is they have to be unpopular now in order to get inflation back down, where it used to be you could count on them each time to rescue you, to stabilize the system, to bring support. And that has shifted. And I think many people, even in the markets, have not quite understood, in my mind, how much we are now in a different regime compared to the last 4 decades, effectively.
So it's what, almost an easing bias in the markets? How would you describe it?
In the U.S., yes. And I think it's this idea, this almost pre-programmed idea, when there is a problem, i.e. potential recession, central banks will come and ease.
This is Markets Today. We're 30 minutes into the European trading day. Here are your top stories. It's Fed Day, but the Treasury's quarterly refunding announcement may steal the spotlight as policymakers look set to keep rates steady for the second meeting in a row. On standby, the yen strengthens from near its weakest level this year after Japan's top currency official says he's ready to intervene in the FX market if needed. Plus, US Secretary of State Anthony Blinken will head back to Israel to try and ease tensions after dozens of people were killed and wounded at a Gaza refugee camp. Let's move away from the geopolitics and into the market conversation this morning. And we see that European equity markets are making very modest gains. We did see gains across many sectors this morning, trying to catch up with the gains on Wall Street yesterday. But some of that's faded a little bit. The FTSE 100 then pretty flat. The DAX up 1/10%. The Stocks Europe 600 also up 1/10%. Let's have a look at the sectors and what we're seeing on the move here this morning. We saw retail as one of the very early gaining sectors this morning, and it still is up by 0.8%. Not up as much as it was, but the numbers out of Next, a UK retailer that it has upgraded guidance in the past 2 months, and now once again this morning that's played out positively for that sector. We also see the pharmaceutical sector doing pretty well this morning. That doesn't stand out on this particular chart, but that's another area where we do have some strength coming through in the wake of those GSK numbers, GlaxoSmithKline, that we talked about a little earlier with our colleague. Time for today's big take story here at Bloomberg. US government debt was once among the sleepiest corners of finance. Well, that's no longer the case, apparently. Fast money traders at hedge funds are turbocharging volatility in today's cratering US bond market. It's giving these investors a chance to make or lose, of course, a lot of money. Let's talk about what hedge funds make of treasury markets these days with Bloomberg's Joanna Ostinger, one of the authors of this big take story. Joanna, very nice to have you with us. So why are hedge funds then suddenly attracted to the treasury market, a part of the market that you point out in your piece has not typically attracted a lot of attention from fast money?
Hi, Anna. In one word, volatility. The Treasury market for a long time was pretty sleepy. It was very predictable. Now, all of a sudden, things are moving around so quickly. And hedge funds that see opportunity and volatility think they can make a lot of money doing it, and they're really getting in.
Yeah, so we had a fiscal impulse in the US. We saw the inflation that resulted from that and supply chain disruptions, and volatility in bond markets then results. So to what extent are hedge funds now increasingly active in treasuries?
So in the past year or so, they've actually boosted their holdings of treasuries by 3 times to more than $2 trillion. And the traditional buyers, holders of treasuries, have gone from about 75% of the proportion to 55%. So it's a much bigger portion at this point. And, you know, again, we're talking trillions of dollars here. It's a really big move.
And especially as central banks are changing the role that they play in the market, the Fed in particular. What are the implications then of this change? What kind of power will these hedge funds have in this market, Joanna?
Well, they could boost yields even further as the U.S. tries to spend more, and there's likely to be even more volatility when you had these holders like the Fed, like the more traditional buyers that were sort of longer-term people. It was a little bit more predictable, but now that you have hedge funds that might go in and out more quickly, might try to do different things to make money, it's a little bit less predictable, so it's likely to be a bumpy ride and, again, likely increased yields as well.
Joanna, thanks very much. Bloomberg's Joanna Ossinger with the latest on that big take story. You can find that big take story on the Bloomberg website, or NI Big Take is the function to use on the Bloomberg terminal. Coming up on the programme, the UK is hosting the first global AI safety summit with some world leaders in attendance. We will preview the agenda for you live from the summit. That's next. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
City. From London, in Sydney, from Washington, in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
This is Markets Today, 37 minutes into our European trading session, and European equity markets making some very modest gains off earlier highs, up around 0.3% on the Stoxx 600 this morning. US futures deteriorating a little bit, now down around 0.25% on E-minis. Let's focus in on the UK and the AI sector, because the UK is hosting its first global, or the first global, artificial intelligence safety summit today. That's in Bletchley Park, one of the birthplaces of computer science. World leaders are expected to attend include the Italian Prime Minister Giorgia Meloni and US Vice President Kamala Harris. Bloomberg's Tom McKenzie joins us now from the summit. Tom, good to see you again. What are we expecting to see this morning? How soon until the big names arrive?
Yeah, good morning, Anna. We're expecting some of the leaders and some of those within the tech sphere, of course, driving the innovation around AI to be walking behind us and turning up at Bletchley Park House behind me in the next 20 to 30 minutes. So the summit kicking off, it's going to be a 2-day affair. Look, you named some of the people who are going to be here, who are on the list that the UK government has managed to corral and pull together. The Vice President of the United States and, of course, Ursula von der Leyen, the President of the European Commission. We have leaders and officials from countries like South Korea, but China as well. There's some dispute and discussion around whether there's disappointment in the UK that some of the bigger political hitters like Macron of France or Germany's Chancellor Scholz are not here. But, of course, there's the geopolitics, and there's a lot of focus right now on what's happening, and understandably so, with Israel and Hamas. But the UK government has managed to pull together these global leaders and, of course, those within the world of AI. Kamala Harris, by the way, the US Vice President, she's going to be giving a speech in the next hour or so at the embassy, the US Embassy in London, where she's going to be building on the steps that the US government has already taken. Earlier this week, there were some executive orders signed by US President Joe Biden in terms of testing of some of the most powerful models. So not the models that are on and available to us today, but those that will be coming up in the future. That was seen as pretty consequential. We've already had a number of big tech executives signing up to a voluntary code as well put out by the US. Kamala Harris is expected to announce, for example, that they're setting up a US Artificial Intelligence Institute within the Commerce Department. She's going to call for greater cooperation, and she's going to underscore the real risks of this technology as we try to look at the upside, the benefits, but also, of course, the primacy around the importance of trying to put a framework around the risks. Now, that was part of the discussion I had with a member of the AI community, a real leader as well, someone who's trying to challenge the likes of OpenAI in that space, and that is Aidan Gomez of Cohere. It's a company that's based in Toronto, Canada, but they are backed by the chipmaker NVIDIA. They're backed by Target Global, a major VC firm. They've got offices in London, San Francisco, and he's a real leader in the space. And I sat down and spoke to him and asked him about the UK and trying to position this country as a global leader in AI, but also about what would be an adequate regulatory response. Take a listen.
A sectoral approach is the right one. We have expert regulators inside of medicine, inside of finance. They know their domain best, and they know how to protect their customers, their patients. And so I would empower them to gain expertise in the technology and implement protections there, as opposed to creating a new horizontal body which tries to fight on all of these different fronts. I strongly believe that empowering existing regulators is the right way forward.
What do you think of the executive action of the Biden administration this week? Do you welcome it, or does it concern you?
You know, I think it's good that there's a priority being put on this. It's time for policy. I think we're past the point of debate as to whether there should be regulation in AI or not. We know there should be. And so this is spurring action, and I think that's very good. In terms of the policy specifically, my interpretation is going to depend on how it's actually implemented. So it's very vague right now. It provides kind of high-level steers and guides, but it's going to, I'm going to have to wait and see how it's actually implemented to build a sense of whether I think it's good for market, good for protecting consumers, and protecting enterprises.
Okay, so implementation is going to be central. You're increasingly becoming a global company. You're headquartered, of course, in Toronto. You've got offices in San Francisco. You have offices here in London. You're attending the UK AI Safety Summit. The UK would like to think that it can position itself as a global leader, not just in the development of technology, but the regulatory framework as well, or at least the building together of a consensus around regulation. How realistic do you think those ambitions are from your position?
Yeah, so I studied here. I went to school at Oxford, and so I think the UK has a massive opportunity, and I'm really proud to see this government bringing the world together to discuss this issue. I think they are taking a leadership position. The talent here is unmatched. I think a majority of Cohere's machine learning expertise at the research level is based out of London, and this ecosystem is so strong. So I think the opportunity for Britain is huge, and they are taking a very active leading role. I don't think it's just talk or public framing. I think there really is so much talent here and a real opportunity to lead.
So Aidan Gomez there, the CEO of Cohere, talking about the UK and how well positioned he thinks this country is in terms of taking a lead, not just on the question of the regulatory response to generative artificial intelligence, but also in terms of building out our own capacity here. He talked about the talent that the UK has, the academic talent, of course, but also the institutional talent as well. That will be welcome from the Prime Minister, of course, Rishi Sunak. There are real tensions, Anna, in terms of how you think about this, because there's the upside, and Rishi Sunak has talked about this, whether that's for education or health, and some of the efficiencies that can be driven there. But there's also the real tension, because this is a Prime Minister who's also talked about the potential catastrophic harm of this technology.
Yes, and we heard there from your guest talking about how, for him, the jury is still out about the US executive orders and that approach. Is there some contrast that we're seeing already between how the US wants to regulate this, how Europe wants to do it, and how the UK, the host of this summit, wants to do it?
Yeah, and China as well, because China has taken its own measures, some would say very concrete, very substantial measures to ensure that they de-risk the build-out of generative AI and large language models in China as well. But yes, the EU is building out and has its own EU Artificial Intelligence Act, and it's hoping that it's going to get signed into law at some point in 2024. There's been a very mixed reaction amongst industry to that piece of legislation being formed and put together by the EU. And then you have the UK's approach, which is right now a little bit more of a laissez-faire approach. And Prime Minister Rishi Sunak has said he doesn't want to over-regulate and risk stifling that innovation. The pushback from those within the industry who are concerned about over-regulation is if you do that, the money flows, the fund flows will go to other jurisdictions and the innovation will happen there. That is one of the concerns. But it's worth pointing out that within the industry itself, there is a very heated debate around what the risks should be defined as. You have people like Jan LeCun over at Meta, who leads artificial intelligence there, saying it's preposterous to talk about existential risks. You have others, the other godfathers of AI, like Geoffrey Hinton, saying that those existential risks are very, very real indeed. So there's tensions within industry, and then there is a bifurcated regulatory approach, at least for now. And as you mentioned, you touched on the executive orders being signed by the US President this week, very substantial, and that is just the first part of what the US will help him to do. Ultimately, the US will need the House and the Congress to sign off on legislation, but that is still, it seems, a long way off.
Tom, thanks very much. Bloomberg's Tom McKenzie, of course, on the ground for us at Bletchley Park, covering that AI summit. And coming up later from the AI summit, we'll be speaking to the CEO of Google's DeepMind. That's Google's influential artificial intelligence lab, of course. That conversation with Demis Hassabis coming up later during programming. Let's get to some of the other top red stories here at Bloomberg this morning. Tesla shares have lost nearly 1/5 of their value in less than 2 weeks amid growing concerns that demand for electric cars is starting to weaken. In total, Tesla's market cap has dropped by $130 billion over the period. The sell-off started when the electric vehicle giant dialed back growth expectations during its third quarter earnings call. That was followed by grim commentary from several global automakers. WeWork shares plunged in late trading after the Wall Street Journal reported it may file for bankruptcy as early as next week. In a filing yesterday, WeWork said it had been talking with creditors about improving its balance sheet and addressing its real estate footprint. At the height of the startup boom, WeWork was valued at $47 billion. A spokesperson told Bloomberg the company would not comment on speculation. Meta is set to be hit by a Europe-wide ban on leveraging personal data from Facebook and Instagram users to target them with advertising. The curbs, recently approved by European regulators, will extend temporary measures that already are in place in Norway. The social media giant says the move ignores its recent changes to give people more control over their data. US President Joe Biden will meet with China's leader Xi Jinping on the sidelines of the Asia-Pacific Economic Cooperation Summit. That takes place in San Francisco later this month. The confirmation from the White House follows months of work between the two countries to set up a sit-down meeting for the two leaders. The agenda of their first meeting since the G20 summit a year ago is likely to span issues including trade tensions, disagreements over Taiwan, human rights, as well as broader geopolitical issues. Plenty of geopolitical tension from Ukraine to Israel and Hamas to talk about. Let us focus in on South Africa now. South Africa's finance minister is set to deliver the government's budget later. He's in a tough position, of course, with lower than expected tax revenues and pressure from the ruling party to spend more on government services ahead of next year's elections. Let's get the details now. Bloomberg's Jennifer Sabasaja is in Johannesburg with details. Jen, good morning. So what are we expecting?
Yeah, Anna, I mean, investors are paying very close attention to what the finance minister, Enoch Godongwana, says later on today when he does announce the medium-term budget. And as you mentioned, he's got a lot of challenges to face, especially when you consider the fact that there's a budget deficit and also a revenue decline that this country is facing, almost $2.8 billion less. And a lot of that is because of the issues around commodity prices, but also the logistics network here that has been struggling for a number of years. And so really what we're going to be looking for with Godongwana is how the government plans to really stabilize the economy again. And as you mentioned, it's going to be a challenge because there are some sides that say, you know, maybe you cut spending, you trim spending, but then there are workers that will be affected because of that. There's also the ruling party, the ANC, that is putting additional pressure given the elections are in 2024. And so there's a lot to consider going into this medium-term budget. But when we look at Bloomberg Economics says, they take a look at the fact that the upcoming elections in 2024 and the potential harmful effects that spending cuts could have, we may see some modest budget cuts from the finance minister today, but definitely a lot to pay attention to in terms of the details that he's going to be announcing today.
Yes, and of course, in terms of detail, a lot of focus on the energy sector in South Africa. It's been an area of difficulty for so long. We got earnings, sorry, from the power utility Eskom just yesterday, Jen. What were the key takeaways there?
Right. The biggest thing to point out, Anna, is that Eskom saw a nearly 24 billion rand loss. That's about $1.2 billion loss. And the expectation from the CEO is that we could see another almost 24 billion rand loss up until the year ending in March 2024. But maybe on the bright side of things, the CEO says that his expectation is that this could potentially be the last significant year of loss for Eskom. But this company is still facing a number of challenges, considering it just recently got its budget support in order to instill some of the improvements that we've seen, but still facing a lot of issues. And of course, as you're seeing right there, Transnet is the other company that the government is also trying to support here and having an impact on the economy. And so seeing that Eskom is still struggling, seeing that this company is still without a definitive CEO is still a lot of headwinds going forward. But, you know, the positive sign, as I mentioned, is that the CEO says maybe this is the end of the loss-making year, and he's taking ownership for a lot of the loss that Eskom has seen.
Jen, thanks so much. Jennifer Sabasaja joining us there from Johannesburg. Coming up on the programme, Treasury yields fall as bond traders await the Treasury's refunding announcement and the Fed's rate decision. Both of those taking place later on today. We'll discuss that and other things moving markets next. This is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
how do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is Bloomberg. This is Markets Today, 54 or so minutes into the European trading day, and we've got modest gains across European equity markets, flat in London, but up overall around 0.2%. US futures, though, have been deteriorating over the last hour or so, a little weaker now. Let's talk about what's happening in these markets. I'm joined now by Diana Elbataji, Bloomberg's managing editor for credit in the EMEA region. Good morning to you, Diana, but not talking Europe to start with right now, taking the global view and thinking about the US corporate credit market. Tell me what's been happening in the junk space, because Ford has actually managed to get itself out of junk, back to investment grade, and you say this tells a broader story.
No, absolutely. I mean, it's a great news story for Ford because obviously it lifted itself out of junk, but what that ultimately means is that the size of the junk debt market has shrunk significantly last month. That is basically continuing a trend that we've seen this year, which is basically issuers are issuing less, the size of the market is starting to shrink, and we are starting to see a price dislocation within that space.
And are we seeing that? As a result, the junk market is smaller than it was.
Absolutely.
That means that the credit space generally is more robust than it was, despite higher interest rates.
That's exactly it. I mean, that's the whole point, because actually the space in itself is more risky, but because there is a lack of supply out there, the pricing is actually more stable. And so for an investor that's coming in, that's seeing investment grade bonds out there, why buy junk debt when you can get bonds that yield almost the same, but much less risky?
Yeah, at the lower end of investment grade.
Absolutely.
Let me ask you about treasuries then. We are seeing yields come down just a little bit from recent highs. We're waiting for the Fed, waiting for news about issuance in the United States as well. And this has been a key driver of the long end story.
Oh, yeah, absolutely. And I think this time around, people are very wary of what happened last time. I mean, last time we saw the yields on the 10-year basically fluctuate by about 15 basis points up. And I think people are a little bit worried that it might happen again. And I think they also know that the Fed is worried about that too. So there is some feeling out there that the Fed might be a bit more cautious, but everybody is watching that space.
Okay, Dana, thank you very much. Thanks for the update. Bloomberg's Dana Elbataji joining us there with the latest on credit markets as we head towards the Fed decision and Treasury notices later. Let me just talk to you about what's going on in the wind power business. Ørsted shares slumping to their lowest level in 6 years. We talked about this with Joe Easton earlier. The Danish utility has dropped 2 US wind projects and recorded a 28 or so billion kroner, that's $4 billion impairment. The company says it expects further clarity in US wind taxes soon. It remains committed to the US wind market, so that story developing, but the shares certainly under pressure, down around 21%. We'll leave you with the European session in progress, making modest gains. This is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why, part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
Slice through the noise. Forget the noise. Ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Good morning from our world headquarters in New York. I'm Manus Granny.
And from our studios in London, I'm Danny Berger. Welcome to The Brief. Let's set your agenda.
A well-telegraphed pause. Policymakers are poised to hold for a second straight meeting as bond traders brace for the Treasury's quarterly funding announcement. On standby, Japan's top currency official says he's ready to intervene in the FX market if needed. The BOJ announced bond purchases as yields touched a fresh decade high. And Antony Blinken is set to head back to Israel. Dozens of people were killed and more wounded at a Gaza refugee camp, stoking concerns about the mounting toll from weeks of fighting. Very good morning. It's the Triple F that is driving the narrative of risk. It is fear of intervention, it's funding, and of course it is Fed Day. What will happen? What will the move? How hawkish will this pause be? But if you are fearful, you've had a message from the Bank of Japan and the Ministry of Finance. The Ministry of Finance are looking at this two big figure move on dollar-yen, and to them, that is a trigger warning. That next level in the dollar-yen market is 152. We've seen an unscheduled level of bond buying in the market. There's a message from the regulatory officials. They stand ready. Kanda at the Ministry of Finance. We are ready. We're on standby. And of course, that underwhelming tweak in yield curve control saw dollar-yen really move. The next trigger level is probably around 152. Now, when it comes to the bond markets, of course, we've had a skirmish with a decade high in the bond market. This triggered the response mechanism, which was unscheduled buying. I love the line that I've had from a broker overseas this morning. The Bank of Japan will not get sucked into line drawing. They will be much more dynamic in terms of what they do. But where is the risk that the Japanese lose control of the long end of the curve, as the Fed did? Much less likely. They own 60% of the market. And of course, two-year yields when it comes to what happens with the bond market. Obviously, Mr. Druckenmiller went to lunch or dinner with Bill Ackman and Bill Gross, because Druckenmiller at Duquesne says he's got massive long bets on two-year yields. So he is fearful. And of course, it's all about the data, Danny, that he's fearful of. Good morning.
Good morning, Manus. I got your equity check for you this morning. We're at the lows of the morning session for futures in this U.S. future trade. S&P and NASDAQ futures down just less than 0.4%. It is another busy day with a lot of earnings. We're going to hear from Qualcomm, for example, a lot of others, Airbnb. And within all of this, for the NASDAQ, we are just a little bit more than 24 hours away from Apple earnings. Citi says that investors are piling up on options that will protect themselves should Apple disappoint. To give you an idea of what we're prepared for, we did hear from JP Morgan Asset Management's David Kelly, who says that the rout has meant valuations are more in line. Don't buy tech yet, buy value. Finally, European equities, Manus, those doing better this morning, up about 0.1%. A lot of earnings means that there's a lot of divergence in this index. Companies like Ørsted, a big wind turbine maker, pulling back from the U.S. That sinks, but we had some more positive earnings from retailers and drug companies this morning. Now, Manus, we're, of course, waiting for the big Treasury financing announcement and the Fed, but I got to pose the question, does it really move markets. How much do we care? I mean, a lot of it is so known. We expect $114 billion, that to be the announcement. We expect the Fed to hold. Is it instead the data that continues to bully this market? You mentioned Druckenmiller talking about the poor anecdotal evidence. What about the U.S. consumer yesterday? Consumer confidence, Manus, yesterday fell to a new 5-month low.
Yeah, but then, of course, are you going to look at soft data or hard data? Because, okay, the consumer may be running out of stimulus checks, but then there's the other side, which is the employment cost index, and of course that is pumping hot. And that, in theory, is what the Fed are most preoccupied about. Higher for longer, based on data dependency, or will it be higher for shorter, based on data dependency? Danny?
Yeah, it's a very good point, Manus. Of course, we do expect to hold. Yesterday, for the BOJ, a lot of differences in what we expected, and what we got was maybe a confused tweak to yield curve control. We spoke yesterday about it with RBC Blue Bay's CIO Mark Dowding, and he had told us that the yen risks falling towards 160 against the dollar if the BOJ buys more bonds. Listen to what he told us.
If it is being forced to intervene to buy more bonds, effectively you're delivering more dovish monetary policy. This is going to undermine the yen, and you can see scenarios where sort of dollar yen is heading towards 160, and investors essentially concluding that BOJ policy is a model and that UAID is making a policy mistake.
Joining us now is Ella Hoja, head of fixed income at Newton Investment Management. Ella, great to see you on this very busy week. Somehow, the Bank of Japan handed out a decision that resulted in probably the opposite of what they would wanted, that is, yields higher and yen weaker. Did the BOJ undermine itself yesterday?
Possibly. I mean, judging by the reaction in financial markets, I think in terms of yields, you did see flattening further out in the curve. So that's telling you not fully, but perhaps related to positioning as well. Now, currency is probably the more telling, and as you were quoting Mark earlier, it's hard to stop that unless you change the dynamics in terms of interest rate expectations, right? So in a way, they have sort of shot themselves in the foot. Now, I think that's sort of like the more short-term implication. Further out, the implications from inflation and wages rising in Japan do mean that the BOJ gets the message and that they will be moving in that direction. But I guess it's a case of steps, and they're being very timid here. And of course, the market's punishing them for it in terms of the dollar-yen move.
Good to see you this morning, Alex. So you say they shot themselves in the foot, and what went through my mind is, you know, you've got a much more louche or laissez-faire FX market relative to the bond market, and I think that's where the test is going to come. There's been 2 tweaks by the Bank of Japan, and as you say, they have shot themselves in the foot. So how much of a test of the metal will the FX market take it? Where will the Bank of Japan be dynamic, or will they try and draw a line in the sand on the dollar-yen move?
Well, the only way for them to do that is by raising rates, first of all, away from negative rates, but also more close to where rates should be in a normal environment, which you can argue is something that the Bank of Japan has not faced for a very long time. We're talking decades. And so that's probably the only way that you're going to arrest this move. Of course, on the other side of that, you have the Fed, so you do need some stabilizations in the long end of U.S. rates, for example. That's one of the other factors that's been driving this move, so it's interest rate differentials. And so it's very difficult to say how that pauses without a shift from the BOJ itself.
Now, today, we're going to get the Fed, we're going to get the quarterly refunding announcement, and so much has been made of that announcement. Plenty of commentary out there saying it's more important than the Fed. I kind of started the show with this, and I want to pose it to you because we have a pretty clear idea of what's going to be in that announcement. $114 billion in combined sales is the estimate. I mean, what are the chances that this is actually a market-moving event today, at least?
Well, you have the Fed event as well, so perhaps the two combined could have enough. I tend to think that if something's out there, it should be reflected in price action. So I would, my view would be limited effect at least from this announcement. The Fed in itself is probably more of a risk factor, certainly on the language. If they use language that acknowledges that nominal growth has been higher than they would have liked, and that even if we come down, we're coming down from very high levels, that potentially has more probability of disrupting rates further rather than the other announcement.
Right.
I mean, if we look across the markets, equity markets have dropped for 3 months in a row. Some people are saying that's the equity market desperately trying to catch up with the bond market. But you make this point on treasuries, and this is interesting. There's good asymmetry in treasuries for you at the moment. 100 basis point rally can give me 12% plus, and if a similar magnitude of a sell-off, of course, you stand to lose around 2%. So bonds are starting to look interesting relative to cash. Where on the curve is it most interesting, and are you a duration hunter? Would you like to wear that title today?
It's a very dangerous title for the moment. I mean, look, we have, we have some duration in the portfolios, right? Relative to where we could be or relative to our history, we're certainly probably more in the middle of the road. And the reason for that is we want to wait this risk events that we have, particularly the ones today, to sort of pan out. And also we want to get a little bit more clarity on the cycle, which is not clear to us, right? That means that we're not maxed out on duration. But of course, we stand by this view that in asymmetry terms, you can make more than lose in treasuries here. Now, there is, of course, a risk that you can sell off another 100 bips from here. I mean, we are running pretty high nominal growth in the U.S. That is a scenario we have to consider. And there is a possibility that the Fed can re-engage with rate hikes. And so that does put bonds under pressure. Now, I would agree with Druckenmiller in terms of the front end of the curve. That has been interesting for us, and that's where we've been shifting more of our exposures in terms of
Would you be willing to do what he's doing, a massive bullish position? I don't know what massive means, but would you be willing to go massively into that?
When he says massive, he really means massive. I don't know. I can match his firepower. Also, he's running his own money, so it's a little bit different. But I mean, jokes aside, yes. I mean, I would say on a scale of 1 to 10, I would say we're probably more close to like a 6 out of 10 right now. So I think it still pays to be a bit cautious on rates. I think vol is pretty high, and I do worry about this element that I was talking about. What if we are wrong and 5% is not the trigger for the Fed, and we actually can go higher to 6%? You have to allow for that probability. I don't think it's our core case, but it's a risk, and so we're managing the risk in the portfolios with that in mind.
Yeah, I mean, folks who started out confident this year that it was the year of the bonds. We're proven very differently, so fair enough on the cautious point. Ella, thank you so much for joining us. Always a pleasure to speak with you. That's Ella Hoja of Newton Investment Management. All right, Manus, let's get to some of the other top stories that are trending on the terminal this morning. China's central bank withdrew cash from the financial system, suggesting it views yesterday's abrupt surge in short-term borrowing costs as a temporary disruption. The PBOC drained 109 billion yuan from the money market by doling out a similar amount of new short-term loans than was maturing.
Well, Bayer has been ordered to pay $332 million in damages to a former land surveyor who claims his cancer was caused by using their Roundup weed killer. Bayer had won 9 cases in a row over the controversial product until October, but this is now the third trial loss in a month for the company.
Shares of WeWork plunged after the Wall Street Journal reported the company may file for bankruptcy as early as next week. In a filing yesterday, WeWork said it had been talking with creditors about improving its balance sheet and addressing its real estate footprint. Manus.
An Israeli strike, I should say, on Gaza refugee camp overnight has killed and wounded hundreds of people, according to the Gaza Health Ministry, drawing condemnation from across the Middle East. Let's get to Oliver Krug, who's in Tel Aviv. Ollie, where is the attention this morning? These headlines, perhaps, we need to consider where we are 3-4 weeks into this.
That's right. So the Jabalia refugee camp is certainly where much of the attention is focused today, where these strikes overnight, killing dozens of people. And again, it's hard to get exact figure on this sort of thing, but it's in the north of Gaza, just north of Gaza City, where it was one of the most densely populated parts of Gaza, which is already extremely densely populated. The IDF said that this is one of their strikes that was aimed at one of the leading Hamas figures, that it killed him and a number of other Hamas combatants. But of course, because of where it fell and because of the collapse of the buildings that we saw around there, drew condemnation from the Arab world and, of course, revived some of the conversations around the ceasefire talk that we've been hearing. A ceasefire talk which, of course, the Israelis have rejected out of hand. We heard Benjamin Netanyahu this week reiterate that. We also heard from the U.S. Secretary of State, Anthony Blinken, yesterday before the Senate. Have a listen.
When it comes to a ceasefire, in this moment, you're exactly right. That would simply consolidate what Hamas has been able to do. and allow it to remain where it is and potentially repeat what it did another day. And that's not tolerable.
And we should say this was in a Senate testimony that was disrupted a number of times by protesters in the back who were objecting to the U.S. position in support of Israel. Many of the protesters had their hands painted red, as in red blood on the hands of the U.S. for supporting Israel. And of course, if the ceasefire is off the table, then what isn't? And perhaps this idea of humanitarian pauses in order to get aid in could be. All of this will be in focus as Blinken, as we discovered yesterday, will come to the region again this Friday.
And a lot of that humanitarian aid has focused on the crossing into North Africa, the Rafah border crossing into Egypt. What is the latest there in those efforts?
So we've seen more aid cross yesterday, a higher number than we've seen historically, still below the levels that were coming in before the crisis and before the war. You know, the UN and other aid agencies say they want to see 100 trucks. Yesterday was closer to 60. We understand there are more trucks flowing today, but the main thing that we're seeing today, and are the first, is the first people that are foreign passport holders that are actually crossing from Gaza into Egypt. This has not happened really since the war began. And also we saw Egyptian ambulances going into Gaza and taking some of the wounded out of Gaza to field hospitals in northern Egypt. So these are two meaningful steps, and again, first of what we've seen since the war started on October 7th.
Oliver, thank you very much. Oliver Cook in Tel Aviv with the very latest. Coming up with Danny and I, the UK is hosting the first global summit on artificial intelligence. We're live to the summit. That's next. We have the UK Deputy Prime Minister, Oliver Dowden, on Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
This is Bloomberg Brief. I'm Manus Cranny in New York, Danny Berger at London HQ. Well, the UK is hosting the first Global Artificial Intelligence Safety Summit today at Bletchley Park. It's one of the birthplaces of computer science. World leaders are expected to attend, including Italy's Prime Minister and the US Vice President, Kamala Harris. Bloomberg's Lizzie Burden is on the ground. She has the UK Deputy Prime Minister with her, Oliver Dowden. Good morning, Ms. Lizzie Burden. How are you?
Good morning, Manus. Well, thank you. Yes, I am at Bletchley Park. This is where the code breakers cracked the Enigma codes back in World War II, and I'm joined by the man who's responsible for resilience in the UK now, Oliver Dowden, Deputy UK Prime Minister. Thank you for being with me.
I wonder what success is going to look like in your eyes over the next 2 days. Have you already reached agreement on the draft joint communique?
Well, we are hopefully going to reach agreement on the communique later this morning. For me, this is about the huge opportunities of AI. If you think about how financial services in the City of London have so enriched the United Kingdom over the past generation or two, I'm convinced that AI can do the same thing for the UK over generations to come. But in order to achieve those opportunities, we have to reassure people about the risks.
So you're going to talk about that communique later. What are the main sticking points?
Well, I'm confident that we will get the communique agreed. What this is about is analysing the risks. And for the first time, we've brought together the leading AI companies, the so-called frontier AI companies, alongside national governments and our security architecture. And what I'm hoping to do is we can reach a common understanding of those risks. And that's what we'll be discussing today. A range of buckets from societal risks to technological risks around weapons and so on, and indeed, ultimately, to consider this so-called existential risk.
Is there a risk by looking at that existential risk, you're getting a bit distracted from the salient challenges of misinformation and deep fakes?
Well, that's precisely why we're dividing it up into different categories. So I would say in the most immediate term, it is risks around misinformation, disinformation, deep fakes. And remember, what AI does is it proliferates those risks. So it increases the number of people that are able to create those risks. Things that were previously just the domain of national governments were at risk from hostile states. Many other actors, going down to your proverbial kid in their teenage bedroom, is now going to be much more empowered by AI. So we do have to take those risks seriously.
And how would the output of this summit interact with Joe Biden's executive order or the EU AI Act or the G7 Code of Conduct?
Well, we're closely coordinating with all of those things. So I was at New York for the United Nations General Assembly a few weeks ago, and I also took the opportunity to go to Washington and met with many of the President and Vice President's senior team to make sure we pull together and coordinate our efforts. This is about dealing with frontier AI risks. There's the President's voluntary commitments, which deal with AI more broadly. They also sit alongside the Hiroshima G7 Accords and other initiatives such as India and elsewhere. And indeed, many of the meetings that I've been having, for example, with Singaporeans yesterday, is making sure that these all work together to deal with a risk that we have in common, but deal with different elements of it.
Joe Biden, of course, isn't here. Is he stealing your thunder on AI?
Now, I think it's actually the opposite. So this all came about, if you recall, from a meeting that took place between our Prime Minister Rishi Sunak and President Joe Biden, and they agreed together that we would hold this summit. So our teams are working hand in glove together, and I think that's reflected in the fact that the Vice President of the United States will be here at this summit.
Well, does his absence leave more room for Chinese officials? Will they get to attend all of the events over the 2 days?
Well, the Chinese delegation is very important because China is a major AI power. They will be attending many of the sessions. I do think that there are some sessions where we have like-minded countries working together where it might not be appropriate for the Chinese to join. But we in China share these same risks around AI. Nobody wants some of the most adverse consequences happening, so it's right that we work with China.
So they'll attend many sessions, but not all, and they share the risks, but fundamentally they don't share the UK's values. How can you reach meaningful agreement on how to regulate AI when it's going to affect pretty much all aspects of life?
Well, I think the common consensus we can find, and you'll see this today, is about a common understanding of the risks and of an evaluation of the risks. And that's why it's so important that we have the frontier AI companies here so that we can talk with them about where those risks lie, our concerns about them, and find a model for evaluating it as the technology evolves. We can't do what we've done previously, which is wait for the technology to evolve and then step in. But it is the case, to your point around China, that they have a different worldview to us, and we're very clear-eyed about protecting our worldview, whether that is democracy, rule of law, freedom. Now, some of those are not, as you know, going to be compatible with China, and that's not going to stop us from taking the steps necessary for our nation.
Another controversial guest here is Elon Musk. Earlier this year, he called for a pause in AI development. By featuring him so prominently here, do you risk being seen to endorse his views, including on Ukraine?
No, we don't endorse many of Elon Musk's views, but Elon Musk is an indisputable tech titan, and it's a sign of the importance of this conference that someone like Elon Musk is here, and it's a sign of what this conference is all about. I've been to many international conferences, as I'm sure you have as well. They tend to be businesses or government. This one is bringing the two together because AI is being innovated by those frontier AI tech companies, but there's a duty on government to protect its citizens against those risks.
Well, Mr. Dowden, we look forward to the rest of the conference. Oliver Dowden, UK Deputy Prime Minister, thank you.
Thank you.
Danis, Manny, back to you.
Lizzie Burden there. Thank you very much. We're going to continue our coverage of the AI Summit today. Tom McKenzie will also be on the ground there speaking to the CEO of DeepMind later today. All right, here's a story that caught our eye this morning. Man, it's more or less Saudi is set to host the 2034 World Cup, but here's the kicker. It doesn't have any rivals. That's why it's hosting it. Australia at one point was the rival. But yes, I mean, it's true, right? Australia dropped out. Saudi is hosting it because they're the only option.
Well, you know what? They're going to have to build an awful lot of stadiums. You're right. I mean, you were looking at the FT story, and we've obviously got the same story, but it's about, well, if you create a structure where virtually nobody else in the world can bid for it, and the Aussies drop out, and that sort of leaves you with the last person standing, doesn't it? But in terms of stadiums, believe me, I know a thing or two about stadiums in Qatar in the heat. It's very hot, I assure you.
I was going to say, there's a video out there somewhere of Bloomberg TV of me asking Manis to do like a header or something with a football, and he does it. It exists out there, folks. You got to go find it on the internet.
It's one of those moments when I said to the producer, can you bring me a football? I want a football. I want a football. And he goes, get him a football. Why he wants a football. And yes, I did do a header outside the Al Sail Stadium. They need 14 stadiums of more than back to the story. They need 14 stadiums of more than 40,000 seats. No, I'm joking. 40,000 seats, they've got 2.
But I mean, they're building out there anyway, right? We've heard of all of these top talent that they're trying to bring to Saudi football teams. So, I mean, they're already going down that route. It's a bit different than Qatar, isn't it? That they're not necessarily starting from scratch. They've already expressed an interest in having a really strong local football offering.
Look, definitely they're not starting from scratch. There's no doubt about that. They've also got the Asian Cup in 2027. So they are going to have a lot of infrastructure. It depends where they're going to have it, in Riyadh or Jeddah or in the higher mountain areas. But of course, those are the key cities. Those are where the key airports are. So I would imagine, I would imagine that you will have. I mean, they've got some amazing footballers that they've signed up, from Ronaldo to Neymar, etc., all ready to play.
Manis, I just want to know, when the World Cup is in the U.S. in 2026, are we going to go to some matches together?
We're going to be there. I'm going to be doing headers. I'm going to be all over it like a rash.
Can't wait.
Or stadiums, or like Ronaldo, or anything at all. We should have tried to let's try and always get a bit of video if we can.
No, Manis, a viewer, oh my God.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is, if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO, and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Welcome back to Bloomberg Brief. I'm Manus Craney in New York.
And I'm Danny Berger in London. Here's what you need to know. A well-telegraphed pause policymakers are poised to hold for a second straight meeting as bond traders brace for the Treasury's quarterly funding announcement. On standby, Japan's top currency official says he's ready to intervene in the FX market if needed. The BOJ announced bond purchases as yields touched a fresh decade high. And Antony Blinken is set to head back to Israel. Dozens of people were killed and more wounded at a Gaza refugee camp, stoking concerns about the mounting toll from weeks of fighting. All right, let me get you your check on equity markets this morning. You are looking at lows for the futures session in both the S&P and NASDAQ. NASDAQ down about 0.4%. It's been a heavy week in terms of earnings. We've had some cracks show up in this equity market. JP Morgan, for their part, the asset management arm, David Kelly, says that now we're looking more in line with historical norms when it comes to valuation. So buy value, but maybe don't buy tech. Well, we're certainly not buying tech today. Again, as I mentioned, it is underperforming. Citi also mentions that investors are loading up on protective options ahead of Apple's earnings. That hits tomorrow after the bell, so we'll have a big event. A lot of other earnings on their way too today. Qualcomm, Airbnb, for example. European stocks, Manus, those are doing better, up 0.2%. Maybe some sideline waiting ahead of today's big show of the refinancing announcement and the FOMC. But Manus, at least so far this morning, it's not the Fed, it's the BOJ that's taking the spotlight.
Absolutely, and we've just heard from Ella Hoxha at Newton saying they've shot themselves in the foot. The Ministry of Finance stands ready to intervene. These markets are nervous. You've got fear of further intervention from the Ministry of Finance. You've got the Fed, and you have funding concerns. But what you have is just a small pivot in dollar-yen. We're waiting to see, will the market test 151.90? That is a 33-year low. We haven't quite done it yet. But this market is irked by the fact that you saw the Ministry of Finance come in and get themselves involved in an unscheduled bond buying program. Candace stands ready. We are on standby to buy. So again, a little bit of two-way action in that market. But what a beautiful line from Newton, that they've shot themselves in the foot. And by the way, you prefer to go dancing with a lush FX market than a constrained bond market. That's all I'll say to you. Now, when it comes to the short end of the curve, let's see what the funding is. It's not going to really impact the short end of the curve. But Henry Druckenmiller certainly is. He obviously went to a bit of lunch or dinner with Bill Gross or Bill Ackman, because he says he's got massive bullish bets on the short end of the curve. I started to get really nervous. I bought massive leveraged positions. And of course, this chimes with what he's concerned about in the soft data, the anecdotal data. You talked about the consumer confidence, didn't you, Danny, a little bit earlier? But the quarterly refunding number we know is 114, well, not we know, we expect it to be 114 billion. Will that blow the socks off the bond market?
It's interesting, though, because all of that also chimes with what Ella said to us, too. I mean, she liked the idea of getting back into this bond market. She said she's not maxed out on duration, but there was a hesitancy, Manus, to not go all out as maybe Druckenmiller or the Bills, because do you really want to risk catching a falling knife in this market?
No, and she actually said we're positioning the portfolios based on the idea, albeit a tail risk, that you could get rates at 6%. And with that in mind, I said, do you want to wear the crown of duration, Hunter? She said that is a very tough crown to wear, but they are tepidly adding to that duration over at Newton. You got a little bit of data, Danny?
I do a little bit of breaking data on the UK. PMIs coming in, manufacturing coming in weaker than expected. Manufacturing PMI for the month of October, 44.8. The preliminary number was 54.2, so that is a pretty solid revision downward. Now, we're going to talk about the BOE in a little bit, but before we can tackle the Bank of England's decision, we have to tackle the Fed's decision. It is posed to hold the interest rate steady for a second meeting, but is leaving the door open for another hike as soon as December. Joining us now is Jumana Salihin, Chief Economist at Vanguard. Jumana, really great to speak with you this morning. Okay, I promise we're going to get to the BOE, but I do want to just start with the Fed and the potential for any surprises to come from them, because we have this really confident feeling of it being a hawkish hold. What could shake up the narrative today?
I mean, I think really it's all going to be about the language and the communication today. So the Fed's going to be weighing up two factors today. First of all, the 10-year bond yield has been rising by about 100 basis points over the last 3 months. So that's a tightening of financial conditions, which is going to weigh on economic activity and slow the economy as the same as a rate hike would. So that's already there. The second thing is the economy is strong. The latest GDP figures were, just under 5% real growth. That's double what we think potential growth is. And so the labor market's strong. Yesterday we saw the wage data come out, the ECI. So the Fed's going to be weighing those two factors. It's going to be a fine call, and they're going to use their language really to signal that it stands ready to hike if necessary.
Jumana, good morning. Good to see you. You touched on the ECI, and of course we looked at that. That came in at 4.3% on an annualized basis. That's slightly different to the Atlanta Fed, which saw theirs slow. But when you look at wages, how hot are they, and does that deliver scope? Our last guest said there is a risk, albeit an outlier risk, that rates would have to go to 6%. Could you see 6%, and what is it that would happen economically to take us there?
I mean, I think, the wage data that we saw yesterday, if you look at the Atlanta Fed, yes, it's a little bit weaker, but on the whole, those wage numbers are consistent with inflation of around 3.5%, not the 2% inflation target. So they're a little bit hot, if you like, and we do see those wages, coming down as the economy cools, as the past interest rate hikes continue to work through the system. What do we have to see for those interest rates to continue going up to 6? That would be a scenario where, what people call the no landing scenario, where the economy turns out to be stronger than expected. We get further surprises on consumption, on growth, on the labor market, and that forces the Fed to say, hey, you know what? We have to go more because the economy is not cooling, and also the real interest rate, which is really what matters. There's a lot of uncertainty about the neutral rate of interest, and could it be that that neutral rate is higher?
Yeah, we're getting into the stars, Jumana. I like it. I guess one of the confusing things, though, is you do have labor data, for example, that's really strong. A lot of the hard data has been very strong, but you look at the anecdotal evidence. It's something that Druckenmiller talked about in the report we saw from yesterday. You look at Caterpillar saying that their backlog has shrunk significantly, and then you have these fears that industrial production in the U.S. has peaked. How much credence do you put on that sort of anecdotal evidence?
Yeah, there's a lot of uncertainty out there right now with respect to where the economy is, and you're absolutely right to say, Caterpillar, construction sector, we're not seeing that weakening, and it's one of the first things that you would expect to see weakening. So the signals are very different And that's because we've come out of some unprecedented big shocks, the pandemic. People are still building those shortfalls in housing, which, they weren't able to do so during the pandemic. So, a lot of those spillovers are continuing into the economy. And the other thing I want to really mention is fiscal policy. That surprised us on the upside. Some of the, the CHIPS Act, the Inflation Reduction Act, the spending has come much earlier in 2023 relative to CBO expectations of them being in 2024.
It's just a question of maybe when pandemic and when the fiscal largesse perhaps runs out. Can we draw on your expertise from your days at the Bank of England, Jemana, which is, excuse me, I'm surprised that you've penciled in perhaps the risk of another couple of hikes. But again, of course, the data is brutal for them. But Danny just broke the PMIs, which don't look that brutal, but we know that it's a tough time in manufacturing. But again, going back to wages, going back to the inflation narrative, going back to the bulk of the legwork has been done. You've come in with 2 more hikes. How assured are you that that's what it's going to take to tame the beast of inflation in the United Kingdom?
I think, Manus, where we really are is, we look at those fundamentals. You're absolutely right to call out the PMIs. The soft data is definitely indicating that there's weakness in the economy. The hard data, I would say, is much more mixed. And on the labour market side, we've got measurement issues in the UK, which create a fog around really understanding what the labour market is doing and how much, it's really easing. We don't really know because of the response rates for the labour force survey have fallen to, historic lows. So we've really got some confusion there. Our call there of, a couple more hikes, that's really based on, as you said, inflation, core inflation, wages. We talked about the US being around 4%. The UK is double that. It's closer to 8%. So we really think to get inflation, take the risks off the table, we needed those couple more hikes. And we know that the Bank for International Settlements have said front load those hikes, right? Yeah. So in the UK, there's a few more challenges.
Just to get back to the data point, I mean, the data has been so confused. You mentioned the low response rates. In the beginning of September, there was this whole brouhaha about huge revisions from the ONS. Some of the figures we thought were really bad, fewer goods and services than the pandemic. Rather than producing fewer, they actually exceeded the benchmark. I mean, it was really big provisions. How frustrating is this data? I mean, how can you kind of trust the usefulness of some of the data coming out of the ONS right now?
I mean, look, the data is always an issue because, you have an initial read, and then as you get more and more responses and more information, there are those revisions to the data. So that's, in general, a good thing, right? The picture, you get more information, you update that information, and you revise your data. So that's really great. Obviously, with the pandemic, there have been big changes from face-to-face interviews to phone interviews, and that's really where we've seen, quite a lot of
And
challenges.
someone like me would never pick up the phone. So I hope they're not calling millennials.
Should be by text, right?
Yeah, exactly. WhatsApp. So, I don't know, Instagram DM maybe.
That's right.
Amanda's jump in here.
Yeah, they're all. But then again, the construct of work has completely changed. I mean, the number of people that I've met here that are doing 2 days in the office, 3 days from home. I know that's perhaps not the norm. I know that back to work is very much on the rise. When you look around the world, the Aussies are unsure that they're done with rate hikes. The Fed is unsure that they're done with rate hikes. And you're pretty darn sure that the Bank of England is not finished with rate hikes, which takes us then to how brutal will inflation spike or respike be in 2024? Because everybody has come in here and said inflation is pretty much beaten. It's the last mile now. But of course, if you look at what elements are bubbling in inflation, it's the elements that perhaps didn't bubble just immediately post-pandemic. So how hard will a resurgence of inflation be as a risk for you 2024?
So, Manus, if you've ever run a race or a marathon, the last mile is actually often the hardest mile, right? So I wouldn't be kind of like declare victory yet.
Right.
I don't think I'm talking about a resurgence of inflation. What I'm really talking about is the stickiness of inflation around current levels. So a lot of what we've seen so far is the easy part, right? The oil prices that were high, the energy prices, the food prices, they've fallen out of the calculation. And yes, inflation has come down. But the last bit is really on the core side. And, I don't really think that we've seen much of that come through as of yet.
All right, still got to make it through that last mile. Jumana, really wonderful to have you on this morning. An exciting 48 hours to come. Thanks for setting us up for it. That is Jumana Salahin, Vanguard Chief Economist and former BOE Head of Financial Stability. And stay tuned for Bloomberg Surveillance's special coverage of the Fed decision. That will kick off at 1:30 p.m. in New York, 5:30 p.m. in London. Now, coming up, we're going to talk tech. AMD has fueled optimism on its new AI chip. The company says it will offset its dull forecast, but pre-market shares move lower. This is Bloomberg.
This story did come around as something that's a bit different. There is a dark side to it.
It's hard to even talk to people about these chemicals and tell them, look, there's a chemical that's in you that's not found anywhere in nature.
We've all been used as guinea pigs for the last 70 to 80 years. We weren't told we were being exposed, but they did it anyway.
This right here is the shadow fleet. To actually see clandestine behaviour was really surprising. That makes you think, well, what else is going on?
A lot of people let Agnes down. What she was told is exactly what happened to her.
It took the lid off a much bigger problem. I think that's probably the most shocking part of this whole thing.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to Bloomberg Brief. Danny Berger in London, Manish Krani in New York. Now, AMD is hoping to look past its mild forecast. It highlighted in its earnings a new AI chip that AMD said will generate $2 billion in sales next year. Shares, though, pre-market down more than 2%. Joining us now for more is Bloomberg's Alex Webb. Alex, it feels like not that long ago where you don't even have to say you have a new AI product. You just have to kind of sprinkle the word AI in your earnings release and the market with gangbusters. Is that era over?
Well, I think the thing is actually with the AMD, people thought that it was very much big in the AI space, that it is the alternative to NVIDIA, and in many ways that is true. It's just it's a little bit behind the curve. It is coming out with these products a little bit later than NVIDIA, which is already iterating on the next generations, having really dominated that first flush of AI spending. The other piece, of course, is that the rest of its business is not doing brilliantly. When you think about particularly its gaming equipment, you know, it makes GPUs that are, or add-ons that are, you know, for gaming. That business, people aren't spending. It's discretionary spending. That spending isn't really coming forward. There is optimism about this, the prospects for these AI chips. What is quite interesting, if you look at some of the multiples, it trades at a very similar multiple to NVIDIA. It is actually significantly less profitable than NVIDIA. So actually its net margin is a lot lower than NVIDIA's. It's partly because it's been spending on developing these chips. With an expansion next year, then it will start to look like it's trading at a significant discount to NVIDIA.
So, Alex, we're also going to get Qualcomm off a little bit later on. They've made some pretty big assertions about what they want to do in terms of making inroads into the PC market. And I quite like the line in the story is they've got to stand those up in size. Do you think that they will?
I don't know. I don't know if they will. They've certainly got big ambitions. They're spending, heavily to get into the space. It is a space that has historically been dominated by Intel. Apple managed to take chunks out of Intel by, building their own chips for their computers. The question is, who are the end customers? We don't know for sure that they have those lined up. They seem very optimistic. They kind of need it to offset the declining sales in smartphones. There have been at various junctures some rebounds in PC sales. Right now doesn't seem like a brilliant moment, but heading into next year when there's a little bit more capital people might hope, then there is an opportunity.
Alex, I just got, this is very serendipitous. I just got a note in from Deutsche Bank in my inbox that we've written up, and I just want to get your take on it. I know you haven't seen it yet, so this is fresh and exciting. Here's the headline: firms that talk AI more see their shares underperform. So companies that have discussed AI more in their corporate earnings call this year have tended to underperform the wider market, according to Deutsche Bank analysts. I just want to get your take on that, what you make of that. Because again, it's kind of what I started with. I thought AI was the thing that saves tech.
Look, they've got to deliver on these things, right? It's all very well talking about them in earnings calls. Sometimes you wonder if you talk about it too much. Perhaps this is the thesis that you're actually trying to use it as something of a fig leaf for underperformance elsewhere. The thing we are seeing with NVIDIA is that they are starting to deliver on this stuff. The thing we're seeing with Microsoft, they are delivering on this stuff. Right. AMD is not quite there yet. Doesn't mean they won't deliver, but it's very much looking like something for next year rather than something that we've seen historically.
Yeah, such a good point. Microsoft discussed AI, and they rallied because good things are actually coming from it. Alex, thank you so much for joining us. That is Bloomberg's Alex Webb. Let's turn now to the world of hedge funds, because we have a lot coming out from the space. Take a listen to what Skybridge Capital founder Anthony Scaramucci had to say.
We're on a good run right now. The month of October has probably been the best month in Skybridge's history, for that matter. A lot of it's Bitcoin, some of it's tech, some of it's newer economy things that have rebounded aggressively since the beginning of the year.
So Scaramucci says he's on a good run, Manus, but he's not the only one. It's been a pretty good quarter for the macro hedge funds.
Yeah, and they're probably getting a little bit more involved in the bond market than they used to, Danny. If you look at the price volatility and the volatility moves in the bond market, it's appealing for hedge funds to get involved there. But Anthony's never short of a headline. He was officially invited, just a shout out to Anthony. He was invited to come in early. He just didn't respond to the WhatsApp. Let's talk about it's not just Skybridge, of course. As I said to you, we've got this whole sort of macro hedge fund trading bouncing back. You got the vol rising in some of the biggest markets, and the best performing hedge fund strategy in the third quarter. So asset weighted returns, Danny, if you look at that, the macro funds hit 3%, while the multi-strategy and equity funds saw losses of around what, 1 to 0.5%, 1.5%, I should say.
Okay, I'm going to rate on the parade here, Manus, because macro hedge funds are still down almost 2% on the year. Yeah, they had a good quarter, but they're not making up for it. So many folks got married to their position of 2022 of shorting everything, which paid off a lot for them. Let's be clear here. But in the beginning of 2023, it did not pay off. We had an equity market that continued to rally. And of course, that period in March after the banks collapsed and treasury markets rallied, that caught a lot of macro hedge funds off guard.
Yep, let's see what the close of the year, how much risk do they want to take before the end of the year?
All right, Manus, we also have more on this on today's Big Take. Big Take is where you want to go. It's about hedge funds focused on the treasury market. More volatility, Manus, there means bringing in more bucks. Coming up, we are going to talk about the things that you need to know to get your day going on Bloomberg.
that's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Like, please, like, really actually tune in. I desperately need an audience.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's Bloomberg Brief. I'm Danny Berger in London alongside Manus Cranny in New York. Let's get you set up for your trading day and a look at what's ahead. 8:30 a.m. Eastern, the U.S. Treasury will announce its debt refunding, which many believe will outweigh the Fed's rate decision. That decision, it comes at 2 p.m. It'll be followed by Chair Powell's news conference at 2:30 p.m. The central bank widely expected to hold rates steady. And then we've discussed some of these, Manus. It's a big day of earnings. We got Qualcomm, MicroStrategy, PayPal, Coca-Cola, Airbnb. They will all be reporting today. How much can they fight through the noise, Manus, of these huge macro events that already have bond markets on edge?
Well, it depends. If they deliver well, they'll probably be rewarded. You saw last week the slightest chip in the wall, excuse the pun, and they were brutally punished. Of course, Coca-Cola raising prices. You're still going to buy your Coke and your Coke Zero, but are you going to notice a 9%, 10% price rise? There's no doubt about it. This market has been put on a global watch today. You got the fear of intervention from the Ministry of Finance. You've got the Fed in terms of quarterly refunding and the FOMC. And I think you just generally have a level of fear that something, to choose your word and a number of guess words, pernicious could happen. But these bond markets are incredibly important, and the Ministry of Finance has put us on warning in terms of they stand ready to intervene in the FX markets.
Yeah, I mean, Druckenmiller said that given we're pulling down on pandemic spending, it's just a matter of when something breaks over the next 2 years as folks start to refinancing. We spoke to Ella Hoja over at Newton Management. It's interesting to hear her agree with the bond bulls, but say we are still being really cautious. Manus, this sense you get in this market, even if you say, wow, look at the yields across this bond market, even if it looks attractive to you, do you risk catching a falling knife if you jump in?
Well, as I said, I think my favorite one is you know, we're going to have this hawkish pause from the Fed, but Druckenmiller has these massive bets on the very short end of the curve. So people are worried that something is going to crack in the edifice of the consumer and something more malevolent is going to happen going into 2025, maybe even before the end of 2025, the end of 2023, going into 2024. I'm a year ahead.
I'm barely ready for this year to end, Manus. I'm not ready for 2025, please. All right, that's it for us on Bloomberg Brief. Surveillance, that's up ahead on Bloomberg.
to kick off with a very simple question. Has the whole Brexit process been messier, less messy, or as messy as you expected way back in 2016?
Was it as messy as we thought it would be? Probably was, and I tell you why, because of the fundamental mismatch between, if you like, rational policy in the UK and what was, in a sense, performative ideology in the UK. And I think that was the problem. We could have had the deal, the so-called Windsor deal, several years ago, but the Johnson government simply did not want a deal on those terms.
But I think for the short to medium term, the next 3 to 5 years, the Brexit will be net negative on the UK economy, no question about it. What happens over the longer term depends on what the British establishment or the future UK governments do. One, I do think ultimately they will finish up in the next 10 or 15 years putting some kind of, I call it a trade deal with Europe similar to Norway or Switzerland. I disagree with Declan. I think they will pay into a European budget. I think they will have no choice. It is too big. The fundamental strength of the single market is something that is too attractive for the UK economy to be excluded from.
Maybe the messier part is yet to come.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Financial conditions have tightened a little bit, but the economy is still rolling.
This has been an extraordinary year. We've seen a remarkably resilient U.S. economy.
We're going to see competition return in a lot of spaces.
So far, the U.S. consumer has been incredibly resilient, but that's going to change.
We're seeing a lot of cracks in the consumer story starting to emerge.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Farrow on assignment this morning. He will return. Rumor had. I talked to his agent. I think he may return here. Lisa Abramowitz and Tom Keene. On Fed Day, we'll have our special coverage of this afternoon. Richard Clarida is scheduled to be with us, the former vice chairman. For Global Wall Street, I'm going to cut to the chase. We start strong in moments. Dominic Constam of Mizuho. Lisa, good to hear from Dominic Constam with all that's going on.
Especially because it's both Fed Day and Treasury Refunding Day, and it's unclear which is going to be more important. There is a question around whether, as Subhadra Rajappa says, this is just a placeholder meeting for the Federal Reserve. Stephen Englander saying, how many ways can you say, we'll see?
Yeah, well, okay, I'll go with that, but we're going to conflate in the markets here. We're going to do a quick data check, and Lisa's wonderful brief, obviously, to get to Dr. Constam, but it's just simple here. I got equity markets are ebbing away, but it's in the yield and the currency space. Let's go, first of all, to the drama. Dollar yen. Give me a 7-day chart on TV, if you would, on yen. Crude oil eases back. Global slowdown, you tell me. Euro 105.49, not giving me much, but the 7-day yen chart, I'm sorry, an explosion up to 151.
So let's give some color to this. Overnight, we did see central bank officials out of Japan saying that they see some FX moves that are not in line with fundamentals.
Yeah.
They also came out with an unscheduled bond buying operation. And again, this highlights that, yes, they want things to float higher when it comes to yields, not this quickly.
I had an unscheduled bond selling operation. I had to go grocery shopping and looked at the cost and said, I think I'll need to sell some bonds here. 2-10 spreads disinvert, the real yield 2.48%. Dollar stronger critically, Lisa. We're going to get a 107 on DXY, which indicates the turmoil out there.
Especially because so many people thought that it would fade at this point. Today, we're watching sort of a double barrel of events. 8:30 a.m., U.S. Treasury quarterly refunding announcement comes out. The key aspect of this is that, yes, we know the U.S. has to raise more money through debt sales, but how? Are they going to concentrate it in longer duration, given the auctions and how messy they've been? Or are they going to concentrate it in the T-bill space with the expectation that yields in the long end will go down?
But do they speculate? Do they game? Yellen got criticism on this in the zeitgeist. Are they supposed to go out and try to game the bond market?
It's a great question. I was actually thinking about this this morning. If she says you know what, we think yields are going to go back down. This is an anomaly. Well, then why wouldn't they sell bills? Wait for that year to roll over and then invest and then sell longer-term debt at much lower borrowing costs.
Should we be doing a 100-year bond like Austria? That's worked out for me.
Well, there's a lot of questions around how to push out maturities, although now probably is not the time. 10 a.m., the latest in the labor market, JOLTS data for September, ISM manufacturing for October. A lot of people think of the ISM as being more current.
Well,
but
this
the
is
JOLTS,
John Farrow's favorite. John
Farrow.
Yes, I remember him.
You should talk to the agent one more time, make sure you get his name right. But honestly, with JOLTS, there is a question here about A, how accurate this is, but B, the idea that job openings are still highly elevated. It's amazing we're using this indicator, considering that in the past people thought of it as highly messy. 2 p.m., Fed rate decision, followed by 2:30 p.m. press conference. We will be here for the Fed special. Is this going to be an interesting meeting, Tom?
Silence on the set here. I think it will be because no one thinks it will. I just somehow think the press conference will be energizing. Again, I'm centered front and center on the deterioration in the banks. Bernanke would say the banks are the heart of the financial system, and I don't like what I see.
There has been such a deterioration near the lows that we saw back in March when we saw real potential existential threats.
Speed opening to the show. Why? Joining us now to begin strong on this day of a Federal Reserve meeting is Dominic Constam. He's head of macro strategy at Mizuho Americas for years, literally iconic at Credit Suisse. We're thrilled that Dr. Constam could join us today. Dominic, I give you the phrase super restrictive. Is Jerome Powell's Fed combined with market action a super restrictive Fed?
Well, yeah, in the context of the sustainability of the U.S. consumer, and if you like, the overhang of debt refinancing in the corporate sector really beginning in 2025, clearly the front end is super restrictive and is going to have to get reversed quite aggressively at some stage. The issue is the timing. That timing has been pushed out because the consumer, who's got great balance sheet, has decided that even as they spent all their fiscal excess that they were given after COVID, they're deciding to leverage up, even with interest rates as high as they are. But they can do that because of the balance sheet. So that kind of delays the impact of this super restrictiveness, which is kind of a bit of a conundrum for the Fed.
So that's the price for longer, not higher for longer, but just longer. What is the cost to Jerome Powell of a longer strategy at these levels?
Well, I think what's happened in the last couple of months really has been that the Fed has decided that, because effectively they are super restrictive, they didn't want to, keep on pushing up short rates. They don't want to quickly go to 6%. So they've emphasized this idea that they're just going to hold at a high level for that much longer. But ironically, that directly feeds into a sell-off in the back end. The idea that what we call term premium, this risk premium that short rates end up being higher than the equivalent tenor of a longer dated treasury. That's term premium. That gets priced into the market, which is why you've had this enormous sort of bear steepening going on with 10s going up to close to 5%, 30s, 5.25%, etc. And in a way, that's not a bad thing if you want to slow the economy, because that will undermine and is undermining risk assets, and it will help to tighten financial conditions overall. So that's the impact of what the Fed is doing. There is a risk, though, that they run, because you get people concerned about as you mentioned earlier, the refinancing of the Treasury. When they decide to issue longer dated debt, that now is coming in at much higher interest rates, and you start worrying about a vicious circle where if you can't reduce the deficit through spending cuts, well, you've got another problem because your interest service costs are going up at the same time, and that's going to get people worried about this idea that Treasury isn't going to be able to sustainably fund itself down the road, particularly when you get those sort of bigger issues coming up, structural issues coming up that will mean higher deficits.
There's always been a sort of uncomfortable tension, especially now, between the Treasury Department and the Federal Reserve, especially because the Treasury Department is helmed by the one and only Janet Yellen, who used to head the Fed. How much is the Treasury going to try to game out the market and kind of give a helping hand to the Fed by not concentrating some of those debt sales in the longer end, sell T-bills and hold pat and wait for things to normalize?
Well, I mean, it's obviously a great question and issue. I mean, strictly speaking, I don't think Treasury really should game things too much. You know, they're not really traders as such, and if they were, then maybe God help us. I mean, the idea I think is you do have rollover risk. So no one really knows how quickly long-term rates might reverse, even if we go into some slowing. Where is this sort of neutral rate? It might be higher, and maybe 10 years trading around 5% is the sort of new norm. So I think it wouldn't be appropriate for the Treasury to really try and game the market sort of near term and sort of second guess that short-term rates are going to come crashing down, and they'll be able to refinance themselves down the road by extending maturity later. So I think they'll probably extend the duration. I think the estimates are kind of seem about right. This sort of 114 billion and putting it in coupons, and because of the announcement we had earlier in the week, they can cut bill supply a bit. So that's our expectation, and no gaming of it basically.
A lot of people expect this to be a boring meeting. Subhadra Rajappa calling it a placeholder. Steve Englander saying, how many ways can you say, we'll see? I mean, this is basically going to be a holding kind of pattern. And yet we see a dissonance growing where the market sees an escalating chance of reaccelerating inflation at the same time that the Fed's kind of seeming to subtly agree with Janet Yellen, saying that yields are going to go back down. Do you think they're going to bridge that gap today?
Well, they could do. I mean, they've always got the option to. I mean, there are a couple of interesting things going on. I mean, obviously, the sell-off in the long end is very interesting, and I think they can definitely address that in the conference call and basically say that's doing some of the work for them and be a bit more optimistic. They can also be actually, even though inflation has been a bit sticky on the very latest prints, they could be a bit more optimistic on that. We've done some background analysis on that, and the reason why inflation has been a bit sticky is it's really been on the demand side, less on the supply side type thing. And I think that's encouraging because that's something a little bit more understandable and sort of indicative that, the underlying trend lower is still in place for inflation. And obviously the global inflation picture has been looking a bit better. So I think they can basically, I don't think it'll be an uninteresting meeting or press conference. It's just really a question of how far Powell wants to go down the road and try and sort of reassure markets. One interesting thing I always think is that, to what extent did the Fed really anticipate or understand that their actions at the September meeting was going to lead to this sort of, near 100 basis point sell-off in the long end? I mean, it's been quite dramatic. And did they really expect that? Well, I guess is a question.
Dominic, I want you, this is outside your remit, but we've known each other for years, so I'm going to go from the macro of Constum to commercial banking. Bernanke taught us at Princeton that financial structure and strength matters. I'm looking at the technical construct of the American banking system, and I don't like what I see. Should the Fed fold in what's happening to the banks right now? Should they today pay attention in their meetings to the weakness that we see in commercial banking equity prices?
Absolutely. And I think the thing that so many people miss is they think that banks are kind of less important now than they were before because of alternative banking, fintech, private equity, other forms of leverage, if you like, in the system people seem to think, credit is created elsewhere. Credit is that there's something called outside money, which is a central bank. And they start the credit creation process. There's then something called inside money, which is the banking system, and they continue the credit creation process. And to be honest, that pretty much is how credit is created. Money can only be created by the Fed and the banks through the bank multiplier. It cannot be created by private equity. They have to get their leverage from somewhere. And so I think you always have to go to the banking system, and you always have to focus on if the banks are kind of doing their job, even if the leverage overall in the system is getting higher and higher, and relative to the banks, they're the ultimate ones who if they pull the plug, let alone the Fed putting the plug, then the whole kind of system can start to implode. So I do think it's very important what's happening in the banks. And I think it's a big concern that obviously lending is slowing down. There is obviously regulation and there's some credit, some capital restrictions taking place, but that's all part of the cycle. And as long as the Fed is there to pick up the pieces at the end of it, then we're fine. But those pieces will need to be picked up.
You sound like Alan Meltzer, the late, great Alan Meltzer, lender of last resort. Dom, I got 30 seconds. Are you concerned at the massive shift from deposits to money market funds? Is that going to destabilize the system?
Well, it's been a challenge, but to be fair, the TGA build-up that the Treasury has done has actually come at the expense of a lot of the money market funds and the repo there. So I think the Fed has actually managed this process relatively well with the help of the Treasury rebuilding TGA with all that bill issuance. So it's a relatively orderly process, but it's obviously something that you've got to keep watching. You don't want excess reserves to get too low in the banking system.
Dr. Constam, thank you so much. Dominic Constam with us with Mizuho today. Just a terrific brief there. And Lisa, this is to me so important. And that in any given Econ 101 book, Begg in England or Mankiw, whatever, chapter 23 is, oh yeah, the banks. And I'd have never bought that. To me, the commercial banking system is a huge part of the Fed meeting that we never talk about because we're looking at rates, we're looking at jobs, and this is a Fed meeting. I'm looking at those charts on the Bloomberg, and I'm saying maybe this is a meeting where he has to talk about the banks.
And they have been supporting the banks with that emergency funding program that can basically evaluate treasuries at face value rather than the real value in markets.
Michael McKee and Lisa Abramowitz really focused on this refunding announcement at 8:30. We continue strong to begin the 7 o'clock hour. Edward Yardeni Research. This is Bloomberg Surveillance. It's Fed Day.
This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open. Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
Will the Fed hold rates steady as expected?
November is dead. Apparently, it's long-lived December.
What the Fed, I think, is trying to do is buy time.
The Fed could well be done.
Trust Bloomberg for the fastest coverage and exclusive analysis.
This will be the third consecutive year of bond losses, which has never happened in history before.
It's simple. The default cycle started.
We're going to be adjusting to events around the world.
The question is, does the real economy slow enough to keep the Fed at bay?
Bloomberg Surveillance. The Fed decides. Today on Bloomberg. Context changes everything.
Demanding offsets for core national security needs like supporting Israel and defending Ukraine is a break with the normal bipartisan process that could have devastating implications for our safety and for our national security interest overseas. There shouldn't be any political games played here with our national security or trying to turn support for Israel's self-defense into some sort of political football. I think we've been very clear how deeply concerning this House Republican bill is, and how it doesn't meet our national security needs.
Kirby of the National Security Council, Admiral Kirby there, managing the message yesterday in an extremely difficult 24 hours on a broadening war in the Eastern Mediterranean. Of course, all the focus this morning on Gaza. The headlines have been absolutely atrocious. Lisa Bramwitz and Tom Keener, as we move away from Fed Day and speak of this moment of international relations. Our Oliver Crook is in Tel Aviv and joins us this morning. Oliver, I'm not going to mince words, and I'm going to say this respect for your reporting in Tel Aviv. Adam Taylor over at the Washington Post today harkens back to the Prime Minister's comments yesterday on Pearl Harbor of 1941 and the attack by the Allies on Copenhagen and the Gestapo, and I believe it was 1942. Allusions to World War II. How was that received by the Israeli people? How do they receive their prime minister talking about the offenses of World War II, given what we've seen in the last 24 hours?
Well, there are a lot of parallels, of course, that have been drawn throughout all of this from the barbarism that has been talked about by the Israelis of Hamas. And of course, the defensive action that they have taken, as they say, is a direct consequence of this. And again, the context that Benjamin Netanyahu brought these topics up again was in this question of ceasefire. He said, would you consider a ceasefire after 9/11, after Pearl Harbor? And in the question of what you're referring to as well, was that the Allies had hit a children's hospital. This is what he was referring to, and that this is the consequence of war. And again, this has been the Israeli defense. Does it reach its limits? This is the question for the international community. And overnight, with the bombing, the striking of this refugee camp, which the IDF says is used to train Hamas, and they say they killed a high-ranking Hamas member there, along with a number of other Hamas insurgents and fighters. The question is, how many of the 100,000 people in that region were still there? It's hard to tell. There were at least dozens killed, and the composition of who those people are is still unknown. But again, this has huge consequences, as we saw with the hospital blast that totally rewrote Biden's trip a few weeks ago.
Oliver, and Judges, Samson carries the gates of Gaza. I'm not an expert on this, but that's the allusion back to biblical times. Who's going to walk through the gates of Gaza today? Who's able to get out?
And the focus is also, yes, on the gates of Gaza and the gates of Rafah with the southern border with Egypt. And as we saw, there is more aid coming in slowly but surely, still less than there was before this crisis, and that's what the aid agencies are focused on. But for the very first time, Tom, we understand that we have foreign nationals that are crossing from Gaza into Egypt. This has not happened since the war began on October the 7th. And also, we saw for the first time Egyptian ambulances driving into Gaza, recovering people, wounded Palestinians, to take them out to a field hospital in Sinai in northern Egypt. So these are two meaningful developments in terms of the flow through the Rafah border.
Oliver Crook, thank you for your reporting in Tel Aviv. We'll have much more, including Anne-Marie Horton on the take from Washington today. Lisa?
Well, there's been an issue in the U.S. side of things. First of all, how deeply the U.S. troops will get involved, but also how much aid can actually get passed to go towards supporting both Israel and Ukraine, which no one is talking about. Jennifer Flitton covering all of this. Fantastic guest to really analyze it for us. Head of U.S. Government Affairs at Invesco. Jennifer, what do you make of this split that we've seen with the House proposing a separate bill to fund Israel that yesterday President Biden said he'd veto?
Right, he issued a veto threat, that's correct, yesterday. We're going to see what the House can do. I think it's still an open question if they have the support, because they have paired the Israeli funding with an offset that directly sort of impacts that Inflation Reduction Act and the expansion of the IRS. And so they will lose the vast majority of Democrats. Could they gain a couple while they lose a few of their own Republicans? I think that's the question, and we'll see that play out on Thursday.
What does it tell you about the nature of funding agreements if funding Israel comes at the expense of cutting the agency served with collecting taxes?
Well, first, I would say this is an opening salvo for the House, because they will have to negotiate no matter what with the Senate. Schumer, the majority leader in the Senate, has already stated that this is dead on arrival. So there is an expectation that there will be further negotiation. But when it comes to offsets, this is a reflection of what is happening in America right now with regard to our own domestic debt, our own deficits that we're running right now. And that's what Republicans in their districts really feel a need to answer to.
Jennifer, I believe it is November 1st. Count it down, 16 days to November 17th. It's been left in the debris. We've forgotten about November 17th. Give us a brief on the importance of November 17th inside the Beltway.
It is coming upon us very quickly. That is an excellent point. And it is not lost on most members. Also, most members that want to get Ukraine funding through the House, Republican and Democratic members. And the continuing resolution, which is that stopgap that runs out on November 17th, that has to be extended. The Ukraine funding may have to ride on that continuing resolution, however they work it out. And we'll see that over the next week. They're currently drafting another continuing resolution in the House.
Jennifer, there's a real dissonance in the headlines that I've been reading, and I am trying to square them. I'd love your help. Basically, on one side, you see the fight that's escalating in Congress, that's escalating with the White House over how to get financing to back these efforts. And then on the other hand, we're talking about U.S. troops potentially being in Gaza indefinitely after the war to keep some sort of peace. What is the appetite in the United States to have a protracted role in some of these conflicts that seem pretty intractable right now?
That's right. I think there are a number of steps, though, that we have to get to first, right? Because U.S. troops are in the region, of course. They are in Iraq. They're in Yemen. This was discussed a little bit at the hearing yesterday with Secretary Blinken and Secretary of Defense Austin. They have been attacked over the last week, 2 weeks. They have had to retaliate in those attacks, and the expectation is to deter further escalation. That, I think, is the immediate issue before we get to the longer term issues in Gaza after Israel is able to contain that area.
There's also a really short-term kind of issue with respect to President Biden's approval rating in some of the swing states. And there was a poll that recently came out that more than 50% of Muslim Americans used to support President Biden, and now fewer than 20% currently do. How significantly is this going to color the entire debate next year?
That's an excellent point. I think the tension there within the Democratic Party and seeing some of those polls, but even seeing the streets, right? I mean, we've seen the protest across America, not just among Arab and Muslim Americans, but also with young people, young progressives on college campuses. And they do see that as a threat. So how they're going to diplomatically work within their own party and their own voters, right. I think we're starting to see that play out.
Jennifer, thank you so much. Jennifer Flinton with us with Invesco there on Washington and the war in the Eastern Mediterranean. Lisa, we haven't done enough justice to data. Start us off here in the bond market. I'm looking at 10-year real yields. We're above a 250 now, 2.48, higher real yield into the Fed meeting.
We are fluctuating to higher highs, and I think that that has been the theme over the past couple of weeks. It has been volatile. It has been more volatile than the stock market, and yet we still are hovering within 10 to 15 basis points of cycle highs, 4.89% as we contemplate just how much debt the U.S. is going to sell in that 10-year maturity, in that 30-year maturity to finance a growing deficit.
The dynamics of the yield curve, the background to 8:30 economic data. Let's remember jobs, John Farrow's favorite, ISM. We'll see that data later this morning. And, of course, into Jobs Day on Friday, this Fed Day. Stay with us.
this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Bloomberg Surveillance on Fed Day. Please stay with us into this afternoon. Some really good guests coming up on the Fed show, including Richard Clarida, the former vice chairman. John Farrow on assignment, Lisa Bramlett and Tom Keene here. A really busy day with some serious market dynamics. Futures negative 17, and the VIX, 22, 21, 20 yesterday. A quiescent VIX, which I guess is constructive, 18.32. And the bond market, 506 in the 2-year, 30-year bond, again, well above 5%, 5.06%, and the 10-year yield, 4.89%. Lisa's got the Bramble cam is about ready to tip over.
Well,
Lisa's so wound up.
Really interesting that S&P futures are failing to get a bounce today after 3 consecutive months of declines. That is the first time we have gotten 3 consecutive months of declines going back to March 2020. That is sort of how unusual it is heading into a November period where seasonally you usually bounce. Today, people are not optimistic, and that tells us something.
Well, it does, and I think it's sector by sector. I mean, obviously the energy complex with the price of oil had a poor month about it, but I'm completely focused on the banks this morning. I'm sorry, but when I walked in and did the terminal stuff on the Bloomberg Professional Service, and what I found was pretty grim. We're also watching currencies, stronger dollar this morning, and I guess I'll quote dollar yen 151.20. We had a surge in yen over the last 48 hours. Right now on a Fed day, it's a Fed day under surveillance.
This morning, Secretary of State Antony Blinken is set to head back to Israel later this week as concerns grow about a mounting death toll after dozens were reportedly killed at a Gaza refugee camp. The Israeli military said the attack on the refugee camp, quote, eliminated many terrorists and destroyed terror infrastructure. It comes as the UN Secretary General has called for an immediate ceasefire to allow for more aid to flow into Gaza. All I can say, the fog of war, Tom, I just get this feeling what we don't know is that much greater than what we do know as all of these negotiations. But what we do see is incredible pain and destruction.
The last 24 hours, everyone can agree, has just been absolutely brutal, maybe the worst I've seen in my life. But I go back, and I think the Prime Minister addressed this yesterday. This new media, this new social is revolutionary for the prosecution of violence. I mean, it's in your face. We don't know what to do with that.
At the same time, we did hear about the head of Jordan speaking with President Biden, which will be interesting to see how some of these back channel discussions and front channel discussions really transpire. The government's quarterly Treasury funding could see the deficit top $2 trillion in fiscal year 2025. Bloomberg Intelligence is predicting that the Treasury's announcement, which is coming out at 8:30 a.m., followed by the Fed's latest decision at 2 p.m., will outline exactly how much they could potentially increase longer-term funding. Meanwhile, our Fed special coverage begins at 1:30 p.m. featuring J.P. Morgan's Priya Misra, PIMCO's Rich Clarida, BlackRock's Jeff Rosenberg, and former New York Fed President Bill Dudley, double-barreling, and they're sort of very self-consciously not referencing one another, where the Fed and the Treasury are kind of getting, I don't want to say pitted against each other, but have a very uncomfortable relationship right now.
It's an eclectic mix. I saw Bill Dudley in Marrakesh at IMF meetings, and he knows the international ramifications of this meeting today. But I would suggest this meeting is suddenly overwhelmed by what we've seen in the bid of bank stocks over the last 5, 6, 7, 8 days, whether it's the major banks or you go down to the food chain, to the regionals, and then to the smaller.
Well, there's a real
banks
question, which is if you don't get bank collapses, if you just get profitability getting diminished and more consolidation, is that a bad thing?
The bid just ebbs away and you see diminished book. I looked at Citigroup's book value off the BQ screen, folks. Apples to apples, it's almost a Deutsche Bank equivalent. I can't believe I'm saying that, but it's getting there.
We talked with Thomas Schode, though, member of KBW, and what he said was he was shocked that there wasn't more consolidation, that we need more consolidation, and he said that really what was happening was that there wasn't really the approval mechanism that was moving in real time to get some of these transactions through.
I think bankers like to go to lunch. That's how they don't want to merge. They're having too much fun being bankers, and all of a sudden you're forced to merge. Like what we see in commercial real estate, it'll be the same way.
Maybe a bit of a different story in the healthcare space. More than 2,000 pharmacists at CVS and Walgreens are planning to walk off the job this week in a bid to address poor working conditions. This comes as customers complain of prescription backlogs. I think a lot of people can empathize with that. CVS saying they are, quote, engaging in a continuous two-way dialogue with our pharmacists to directly address any concerns they have. Meanwhile, we just got some CVS earnings crossing with revenue beating expectations. Earnings per share coming $2.21 and reaffirming their full year guidance. Maybe that's what's giving a pop, but I'm curious to see as we dig through the statement what they say about labor and base costs.
There's front of the store and back store. The same store sales up 8.8%, which is a pop in nominal GDP number, but I think it's pharmacy based. Is front of store same store sales were down 2.2%. They sold less Halloween candy, and maybe they sold a lot more pharmaceuticals. My editorial on this is simple. I'm not going to mention any names. We don't do that. We don't badmouth people on surveillance. My pharmacy next door where I live, absolute dump. It is the single worst branding of any corporation I know. It is a dump.
Okay, aside from your corner drugstore, there is a question just more generally in cities where a lot of the drugstores have had to put plastic and lock up their shampoo and lock up hair ties.
I said, can you lock up the Doritos so afterthoughts?
Well, this is sort of the issue, is sort of how do you compete then with Amazon, where you order it and you get it in a box, you don't have to call somebody over and get them to unlock it. There is this question about shrink, which is theft, what we're going to hear from that, but also the idea that they have to compete on labor costs in a new way, and that's really becoming clear.
Heidi Krivo-Redeker joining us now on this Fed Day, International Capital Strategies partner, also with the Council on Foreign Relations. Heidi's going, when are they going to stop talking about Doritos and start talking about the Fed? Heidi, you and I remember when Greenspan was looked at, like, what was his lunch? What lunch was he carrying to the Fed meeting? Is there any intrigue to this Fed meeting from where you sit in Washington?
So, I mean, this is Fed Day, so there's a lot of intrigue. But I think, you know, what I am looking for, you know, there are obviously the core data that the Fed looks at. But the last time that Chair Powell spoke before the blackout period, he actually referenced the elevated geopolitical tensions that you were talking about earlier. And aside from the absolute tragedy that we're seeing, the human tragedy, you know, this is something where I'm looking to see if there is a hint of an introduction of geopolitical risk and the potential for spillovers into global economic activity to come out of what he talks about today. Because it is, I think, you know, we're looking at a new Speaker of the House and suddenly the funding on the table for national security front and center. We're looking at whether or not whether this Israel-Hamas war actually increases and we see any more direct conflict. I'm actually not in that camp. But I think this is a tinderbox that everyone has to keep an eye on, with Russia, Ukraine being a backdrop, you know, military as well as economic issue.
At what level is Jerome Powell central banker to the world? We see upset in Japan. I thought Lagarde tiptoed through her press conference nicely. Maybe she has a nice disinflationary tendency. But internationally, are all eyes on Chairman Powell today?
Yeah, I mean, I think even though today, I think there's a general consensus of a pause, and I think that this is the big meeting. The ECB is likely to keep stand pat and keep rates higher for longer, although no one really knows how long. Bank of Japan, with their yield curve control, actually was a smaller move, which made bigger news. But all eyes really are on what Chair Powell is going to say today about the path moving forward. We do have a lot of uncertainty in the market, and as I referenced earlier, I think some of it does come from new uncertainty, new concerns, and those are related to what the implications are from geopolitical risk.
The Treasury Department and the Federal Reserve both try to create this sheen of being above sort of the day-to-day events, not necessarily paying attention too closely or responding in real time. And yet there's a real question about whether the Treasury Department, as they deal with the refunding announcement today, are going to basically game the market and go with what Treasury Secretary Janet Yellen said, which is yields are going to go down over the long term. So then why not just focus all debt issuance on the short end?
So, that's between Treasury and Fed and who's going to take the bigger headline. I think it's likely to be the Treasury refunding announcement, but there is a lot of speculation of where those funding costs are going to start to really hurt, and where the concerns about the deficit, which we also is rising and is $2 trillion, the new normal. How does that impact the ability to borrow in the short, medium, and long term? So yeah, there will be a lot of attention on the funding restatement as well.
How does this challenge the U.S.'s ability to respond to some of the international issues? Just to sort of tie all of this together, this question around the geopolitical risk, the human tragedy, the question of just how boundaries and territories are going to be redrawn, and a real question, in your view, about how much the U.S. is willing and able to finance all of its endeavors. How much is the Treasury's actions going to directly influence how much the U.S. is willing to go further into Israel, into Ukraine?
So, we know we're in a world where geopolitics and politics and national security in particular trumps a lot of traditional economic and commercial rationale. And so this is when you're looking at in particular, Russia, Ukraine. This is an incredibly sensitive national security priority. And, if you heard Secretary Blinken on the Hill yesterday, he could not have made this clearer, that these are all connected. And a lot of what we need to do is make sure that we stand up and take action, not just the United States, but our friends and allies. And that a lot of the funding of the $105 billion that was in the request is going to go towards rebuilding the U.S. defense industrial base.
Heidi, thank you so much. Heidi Crabo-Redeker with us with the Council on Foreign Relations on a broader view of this Federal Reserve system. The broader view is, well, we look at the bond market. It's the tea leaf of what's going on right now. Yields churn, we're in 3 basis points lower yield, 4.90%, and the 10-year yield. But the dynamics are fascinating. And Lisa, to me, with Priya Misra coming up in the Fed show, this disinversion, right? Suddenly, it's like, okay, the disinversion's over. Things have calmed down. Not in the last 48 hours. I'm back to 16, make it 17 basis points. Teens-weens difference between the 2-year, which is the same yield as the 30-year, but I hope I'm getting this right. The 10-year yield is a little bit below the 2 years. So Priya Misra is going to be interesting on this disinversion.
Especially because we had expected it to continue to invert until the Fed cut rates, and that would be sort of the leveling feature, but it's been the opposite. If you take a step back, what this basically means is everyone expected the Fed would have to be overcome by events, to use your phrase, Tom, and they'd have to cut rates. And that is off the table at this point. And now the bigger risk that so many people see is a reacceleration of inflation. And that's being expressed in part, you could argue there are other issues too, in the long end of the yield curve. The question I have is, when's it going to bite credit? Nobody is really saying that there's going to be a massive wave of defaults, and yet I'm looking at average high-yield bond yields, all-in yield at 9.5%. That's the average across the board.
Rule 101, this is Dornbush 101, is intervention is not just about the currency market, and there's a thing called sterilized and unsterilized. We don't, it's too much heavy lifting for early morning TV and radio. But Mohammed Al-Arian has out another kind of intervention, which is when a government steps into the bond market to make a quick adjustment. Thank you, Dr. Al-Arian, for this, where all of a sudden a lower yield on the Japanese 10-year. We've been watching for that. He uses the Bloomberg Professional Service to do that. It's amazing.
Crashing it.
Cambridge writes a check on that. Pretty cool. Coming up on China, definitive end occurring on this Fed Day. Good morning.
The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority. The top names at the Fed are on Bloomberg.
The economy is handling much higher rates, at least for now, without difficulty. So notionally, that might tell you that the neutral rate has risen, or it may just tell you that we haven't had rates high enough for long enough.
The bond market has tightened quite considerably. If financial conditions are sufficiently tight, our work is not necessary because we don't need to boost them more.
Nobody covers the Fed like Bloomberg. Context changes everything. The top names in global leadership are on Bloomberg.
The conflict between the U.S. and China has escalated so much. This is one of my greatest fears, that the small nation is forced to suicide.
Bloomberg. Context changes everything.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I think policy is restrictive, but is it restrictive enough? I mean, until the economy actually slows down, until inflation really comes off, it's hard to say that. And so I think that's why that at a minimum, they're certainly going to want to keep their options open. You know, they've signaled another pause, but Powell has certainly kept the door open to further hikes.
Stephen Stanley noting the buoyant third quarter GDP, which maybe messes up the calculus that Chairman Powell has to look at today on this Fed Day. Mr. Stanley with Santander, U.S. capital markets, a great benefit yesterday. And we move on to the further benefit of all the markets in real turmoil. Lisa, help me out here. I've been looking at the equity markets, negative 14. The VIX has improved 18.22 over the last 48 hours. But I got craziness within the FX market, some real tension within Japan. There's no other way to put it. And then also in the bond market, the bonds move, and they're dynamic right now.
Well, you have over in Japan the idea that they did intervene. An intervention came in the form of buying bonds, not necessarily intervening on the FX market, but they did say that they see some FX moves not in line with fundamentals. So it seems like they've got a double-barreled bazooka ready to go to try to fine-tune a very unclear program. And then in the U.S., I don't know exactly what the bond market is responding to. We've gotten hot economic data, and it has not responded that greatly. We've gotten weaker economic data, and it has. I mean, honestly, how much is this getting whipped around by leveraged players that are just basically making massive bets?
Right now, we are going to go to end Curran. He is expert on the Chinese economy. He lived COVID in Hong Kong for Bloomberg News. He's our global economy correspondent on the Washington Watch today. We lost Tony Bennett this year, Enda Curran, the giant of the ballad. His work with Bill Evans, just absolutely iconic. And he would sing, "I left my heart in San Francisco." Are we going to leave the trade war behind in San Francisco? We have Biden meeting Xi. That's the rumor, at least. How's that going to go, a wise one?
Well, obviously, the fact that a meeting is happening in itself, Tom, of course, it'll be significant. It will be the first gathering of the two leaders in a year, probably, I think, only the second one since Biden was elected. Now, where the real progress will be, I think it's more about just getting relations between both governments back on an even keel. You know, throughout the summer, there's been this theme of stabilizing things ever since the debacle over the balloon back in February. But what I would say is, remember when Xi and Biden met in Bali last year, about a year ago, at the G20? That was meant to be the Great Reset. And of course, we all know what came after that. And that's why I would temper any optimism in terms of what does come out of this meeting. I think most people are just expecting perhaps an effort to stabilize relations at most.
You are an expert at this. I put you in place with Stephen Engel for just years and years of watching, in this case, the South China Sea. How do you interpret, Enda Curran, planes or whatever, boats flying close to each other, bumping into each other, whether off the Philippines or in the vicinity of Taiwan? Is it the same old into this summit, or is it a new level of tension?
It feels like the tensions have ratcheted up, Tom. It's not quite the same old. Obviously, it feels like, certainly optically at least, China is being more aggressive on those seas. We see those clashes with the Philippine boat, like you mentioned in recent weeks. A lot of scrutiny in terms of how the U.S. will respond there as well, given, of course, the renewed alliance between the U.S. and the Philippines. But I think it just adds to one piece of the global jigsaw at the moment, where we have geopolitics dominating all else. Of course, you have the Middle East, you have the Ukraine, and of course, everybody's watching East Asia to see what might come out of the tensions there, not just, of course, on those contested waterways, but also over Taiwan, with that election now coming up very soon in January. So I would say, of course, these are long-running sores, but it certainly does feel like the tensions are a level or two above what they were.
Let's put those ideas together, especially given your global purview. It's a fantastic position to be able to really understand the cross currents of the economy paired with the cross currents of geopolitics. Who has the greater leverage right now, the U.S. or China, when it comes to the economic backdrop to the political rivalry?
Well, there's no doubt that the U.S. economic story this year, Lisa, has definitely surprised on the upside. As you well know, the U.S. is the locomotive for global growth at the moment. A big contrast, of course, to where China has been struggling with the post-COVID zero recovery that everybody expected. It's really disappointed, and we saw more disappointing numbers overnight. On paper, that would give the U.S. leverage. But let's not forget, though, that China continues to court the global south. It's not so long ago since they won an expansion of the BRICS gathering. Of course, you can be skeptical about that, but nonetheless, an example of where China is continuing to grow its influence. Now we're seeing in the Middle East, of course, the different opinions spray out in terms of reaction to the U.S. role in that, and of course, the reaction to how the role that China is playing in all of that. So even though the U.S. does have this economic advantage this year, long-term projections for China's economy growth are being downgraded. It isn't playing out as simple as that in a geopolitical field. China's courting the global south and doing so assiduously. And of course, the West is grappling to keep together some kind of a Western alliance.
We haven't even mentioned that Apple's going to be reporting earnings on Thursday, tomorrow. And a big question mark here is its ability to operate within China. Do you have a sense of the cross currents about U.S. companies, international companies, and their ability to operate in China? How much China wants to court those companies to try to give a boost to an economy that's flagging internally?
Well, I think consistently China is saying they do want foreign investment, and they are trying to court foreign companies. And of course, broadly speaking, we know the big multinationals are operating in there fairly smoothly and getting access to the market. But of course, there are two aspects to this. The question is, do foreign companies want to grow or expand their business in China, or are they looking elsewhere? And I think there's a thread now, and a theme coming from the data, they want to look elsewhere if they can. And of course, let's not forget the other side. China says they're open for business, but the security apparatus continues to put a lot of scrutiny on some of the foreign companies operating there. So the optics and the messages are very mixed.
As you well know, renminbi yuan advanced, strengthened from 8 to 6, and we've nicely come back more than halfway to a weaker yuan, 7.31. In addition, we've got Japan instability in currency markets as they attempt to figure out the future of yield curve control. What is the instability of the Pacific Rim right now? How do you gauge what the deepest of deepest markets is telling us right now about the Pacific Rim?
Well, it's a strange one, Tom, because if you'd stopped me in the street at the start of this year and said that the yuan over summer would have hit, the 15-odd-year low that it did, that China's real estate would be worsening, real estate crisis would be worsening, and the economy would be in the state that it is, I would have said to you there would be shockwaves through regional currencies and through global markets. But the spillover from China's slowdown and the weakness of the yuan has actually been more contained in my think. I mean, look at iron ore prices trading around $100. It hasn't yet spilled over as it has done in previous China slowdowns. I think Japan's yield curve control story is the one to watch, though. Fairly modest reaction to the tweak that they made the other day. But if Japan does pull out of that, then that's where you get into this giant sucking sound of money returning that people talk about. And that would send, I think, volatility through global markets.
And that goes back to the flows analysis, folks, not so much the interest rate analysis that the media focuses on. And to Curran, as always, thank you so much for the brief. He is in Washington and head of all of our global economic coverage with Bloomberg News. We haven't said enough about the equity markets. Futures negative 14, 4,200, which means John Stolfus lowering his S&P to the end of the year because we're running out of time to the end of the year. Do you have your, I don't have my tree up yet. I'm starting to see people. Were the trees up already?
No.
It's un-American.
Come on. I actually saw somebody dressed as Santa Claus yesterday for Halloween, and I was thinking, I mean, we're going to get, the Christmas carols after Thanksgiving, but moving it up to Halloween seems a bit, I don't know, ambitious.
I was out trick-or-treating, and, I wanted yield curve control, and somebody across the street wanted his convexity, and they, we didn't cross the same side.
Quite the neighborhood, that's all I can say.
Too much dynamics there. But, let's go through the levels. 4,200 SPX, Dow 33,000, NASDAQ 100. Look back year to date, the NASDAQ 100 up, 20, 30%. I mean,
giving it back, though.
You'd think it was a massive bear market, but it just isn't. We're just addicted to going up every month.
Not over the past 3 months. And this is what I find so interesting, that we just had the first consecutive 3-month drop going back to March of 2020. November usually is a seasonal rebound, everyone is saying. We're not feeling the love, and we're really seeing Mrs. Disappointed Hartla in a significant way. Estee Lauder coming out and downgrading their full-year forecast. Those shares getting really punished. Again, there is a punishing type of feel in markets to any kind of miss whatsoever.
I missed Lori Calvasina early in the week, and I'd really like to talk to Lori about the makeup of, the non-Dow stocks. I mean, she's on the mission of small cap. And
yeah, you want to hear about small caps? Well, they actually went through the lowest levels back to November of 2020.
I mean, maybe I could help Estee Lauder out. I need to work on my advanced night repair.
I'm a big believer in advanced night repair. I think liquid liner would look really good.
I can brighten, repair, and protect.
Just,
Good morning, the managers of Estee Lauder. Ed Yardeni, he's got a night repair. Julie Swinehart is supremely skilled at navigating the rapids of real estate. That's important because real estate development is the next frontier in the business of sports. Fenway Sports Group has a blockbuster project in the works.
We have 5 acres to play with here. And when all is said and done, we expect 2 million square feet across residential, commercial, retail.
Given the track record of Messrs. Henry, Werner, and Gordon, the Fenway Corners plan comes with high hopes of success. That doesn't mean it will be an easy lift, especially right now. What have you learned with the dynamic move of the interest rates? Do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
Julie Swinehart took me on a walking tour into the future.
This is going to become the true entrance to Fenway Park, and that's part of the attractiveness of this project is the age-old recipe of increasing dwell times, bringing fans to the park, bringing in businesses, maintaining what's here and preserving some of the historic nature of what you see around you, but making it even more accessible, making it more fan-friendly.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Financial conditions have tightened a little bit, but the economy is still rolling.
This has been an extraordinary year. We've seen a remarkably resilient U.S. economy.
We're going to see competition return in a lot of spaces.
So far, the U.S. consumer has been incredibly resilient, but that's going to change.
We're seeing a lot of cracks in the consumer story starting to emerge.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television. Fed Day. Jonathan Farrow on assignment. We hope he's doing like secret projects. I think it's off his Daniel Levy thing.
Secret projects.
Yeah, the great interview with the Tots, and boom. So it's Lisa Abramowitz and Tom Keene here on Fed Day. We'll drive into the afternoon. We've got a great lineup for you for the Fed show. Great lineup. Now, Dominic Constam starting our 6 o'clock hour. Edward Yardeni will be with us in moments. And because of that, we're going to do another speed through the opening segments here. The speed you need to know is a slowdown in the equity markets. Negative 15 right now. The VIX 18.25. Bond market's giving us some dynamics. Priya Misra scheduled to be with us with JP Morgan on this disinversion. I note 16 basis points. It's getting a teensy weensy vanilla spread, which I think is worth talking about here. 4.91% in the 10-year yield. DXY got dollar strength. And Lisa, I mean, to start off the dialogue here, the currency market's talking to us. There's no other way to put it.
Well, if you look at Japan, it's talking to us and saying we don't know exactly what the Japanese officials are going to do and what they want to do. More broadly, it's risk aversion. And you can see that be borne out just more broadly in terms of, yes, a bid into bonds, amid all of the concerns about inflation, but also a bid into dollar.
Earnings season as well. We're going to keep you up to date with all that. Estee Lauder tanking. We noticed that was a night repair. I just didn't sell it. You know, I didn't do enough of that. And CVS out. Kraft Heinz out moments ago. I got this refrigerator stocked with Velveeta, so we're doing, we're doing okay there. I mean, do we care about these boring stocks? I mean, we're totally addicted. Apple's out with new products. Let's do team coverage of Apple. Do we do team coverage of Kraft Heinz?
I care tremendously, and I'll tell you why. Because they're raising their prices. I don't know about Kraft Heinz in particular. I need to look through all of the particular headlines. But what we've seen from Coca-Cola and from the likes of Caterpillar, they're raising their prices and increasing their volumes. This speaks exactly to the stickiness that we're seeing both in prices and in wages.
And this is something that ties right into the Fed here. At what point does price where McDonald's can't raise the price of my #2 value meal.
And the implication, based on expensive burgers and based on expensive Coca-Colas and shrinkflation, is that they can still raise prices and still sell. And that, I think, has got to be keeping the Fed up at night.
I mean, you know, I'm keeping Kraft Heinz in business with Velveeta. We always have a brick in the refrigerator. But the bottom line is,
just selling
I'm
it.
sorry, this food thing they're doing back to 2015, I think that's 8 years, I'm going to call that, -6% share total return. I mean, the boring stocks that we're in this earnings season right now on, it makes for bad TV and radio, but stay with us. And the answer is they're not performing.
Well, and you could end up getting a discussion on Ozempic, and suddenly they become flashpoints for arguments, right? Are they going to see some drop-off in sales from Ozempic? That's what I think is going to be
We've got Fed Day today. We're going to do a lot here in economics. Again, Ed Yardeni to join us here in moments. Let us brief.
All right, 8:30 a.m. we get the U.S. Treasury quarterly refunding agreement. A lot of people saying it's going to take precedence over what we get later in the day. The idea here is how much of the U.S. deficit will be financed by selling longer-term debt versus shorter-term debt.
Peter Fisher was brilliant on this ages ago with his public service, and he said, do we want our Treasury bond guessing? That's the heart of the matter. And we don't. I mean, I think there's a wide consensus. We just play by the rules and issue the paper and move on.
Drew Mattis of MetLife wrote in earlier, and he said what they need to do is get rid of the idea of doing buybacks to help boost liquidity, and just regular and predictable auctions save money in the long run. 10 a.m. we get the latest on the labor market. JOLTS data, which it used to be thought of as pretty volatile, now is a key measure. This is for the month of September at a time where there used to be 2 job openings per unemployed American. Now, there is a question of how much those openings are going down and how much they really tell us about momentum in the labor economy. Tom is yawning. 2 p.m. Fed rate decision, followed by a 2:30 p.m. Press conference with Fed Chair Jay Powell. We are going to be doing, of course, the Fed special with a whole host of fantastic voices, including Bill Dudley, formerly of the Fed, and Rich Clarida, also formerly of the Fed, Priya Misra, Jeff Rosenberg, to really get a sense of how important this meeting that a lot of people think is a placeholder.
You know, I yawned, and the kids kept knocking on the door all night. We ran out of candy.
Very good costumes.
You know, we bought 1 bag of Kit Kats, gone. I gave out old bow ties.
I bet you'd have a line out your door.
I went back in a closet. I got these hooks that got all the bow ties on. I just picked out 10 or 20 of the old ones. And here, kid, have a bow tie. You'll love this.
They, I'm sure, loved it.
Some of them are as old as when Edward Yardeni was at C.J. Lawrence. It was a wonderful tour of duty and must reading always Yardeni on the economy at C.J. Lawrence, now with Yardeni at Research. And it's really been prescient about being in this market. What do you want to glean from the Fed today, Dr. Yardeni? Take all your economics at Yale years ago, and what do you want to take away from Chairman Powell?
Well, look, Tom, Chairman Powell just gave a interview on October 19th. It wasn't that long ago, and not that much has changed other than yesterday we got maybe a somewhat hotter than expected employment cost index. And then the consumer confidence numbers came out. You just talked about JOLTS. There's something in there called jobs plentiful, and it shows that jobs are plentiful. So the labor market remains actually fairly hot. So I think they're going to say the same story is going to remain intact, which is we're going to remain restrictive. We're not anticipating cutting interest rates anytime soon. And if we do it next year, it's more likely to be 2 cuts rather than 4 cuts.
Iconic Yardeni is to be in the market, to participate. Are you pulling away from that belief because you got 5% plus cash equivalent?
No, you're right about that. My view in the past has very often been that when you get these sell-offs, they're buying opportunities because in the long run, the stocks do very well. So I guess I'm sort of in the Warren Buffett, Jeremy Siegel camp with regards to equities. The problem with getting out of the market at tops, if you're that smart, you also have to get in at the bottom, and that gets a little tricky. But at this point, I think that 5% is awfully attractive. But I think over the long run, we're going to find that this correction is offering opportunities in technology, in financials, and even in energy.
In financials, let's pick up there. Where in financials do you think has been opened up as an opportunity after the correction?
Well, I think the large caps certainly are safer at this point than the small cap stocks. There's a lot of concerns that the small cap banking crisis isn't necessarily over. We had a crisis back in March. Clearly, the commercial real estate market is under a lot of pressure, and small banks are exposed to that. But I think there's going to be a wave of consolidation, a lot of M&A activity in the small cap banking area. And so right now, it's like, which ones do you want to avoid? I think once the M&A activity starts to pick up, it's which ones do you want to own?
When we try to parse through what is noise and what is signal, I have to keep going back to the Treasury funding agreement that comes out in less than 90 minutes. It feels like this could have a bigger influence on pushing yields higher in a bad way. How closely are you watching this? What's the breaking point to make you a little bit less optimistic?
Well, look, everybody now at least knows that it's going to be a lot of money that needs to be raised over the next 6 months. It's over $1.5 trillion. And that announcement came out on Monday, and the bond market didn't flinch. So I'm kind of coming to the conclusion that the 5% may be the yield at which the market clears. I mean, there is some interest rates at which demand will equal supply, and 5% may very well do the trick.
For Trick or Treat, Ed Yardeni and Joe Abbott put out a spectacular, I'm going to say 8 pages, 15 charts maybe, on your banking business. Ed, what was a summary of you looking at diversified banks? You've got, looking back 20, even 30 years of bank forward PE of 8.8. Is it the Yardeni buy of a lifetime?
Well, I wouldn't say it's the buy of a lifetime. I mean, the problem with saying something like that is that it's a jinx. I certainly don't want to say that. No, I think, as long as we get the economy right, and the economy looks pretty resilient, as we all know, I don't think we're going to have a recession next year. I think, there are some odds of a recession. I've recently raised them from 25% to 35% because of the geopolitical risks that are out there. But my base case is that the economy grows, earnings grow, and in that situation, the large cap financials should do all right.
So if that's your base case, why wouldn't you go into small caps as the most greatly leveraged to possible momentum and strengthen the U.S. economy?
Well, Lisa, it's because I keep getting burnt there. I mean, the small caps have been very attractive for a long time from a valuation perspective, but this annoying recession that's supposed to be coming any day is not good for small caps. So I think they're continue to be very attractive. But I want to see more signs that they're showing some signs of life.
Ed, the signs of life there go away to other sectors, and we're still living the sector juggernaut. I know you hung on every word from Tim Cook the other day with the product launches at Apple. I'm going to say you and I haven't even seen this. I mean, it's literally the Nifty 7, taking it back to our youth. But the bottom line is, Ed Yardeni, if I own these stocks, what do I do with the Magnificent 7?
Well, you continue to own them. I think it's just going to be a fact of life here that they're going to account for a disproportionately large fraction of the S&P 500 market cap. Right now, they're 27% of the S&P 500 market cap. I don't think that's going to go away anytime soon. And so they are the behemoths that are driving the market. I think they're going to continue to do that. And they are rather amazing companies.
Thank you for the brief. Edward Yardeni there. Again, we protect the copyright of all of our guests. Look to Yardeni Research for that important 8 pages on banking. Just fabulous, fabulous charts showing relative valuation over literally 3 decades as well. It's just great to talk to Yardeni, or I think of Michael Darder, where you synthesize the economics into, heaven forbid, somebody actually making an actual market call.
What I thought is, and I always love what Ed does here, which is he throws in little nuggets that really stand out, like the fact that he's increased his recession call from 25 to 35%, not because he thinks that the economy is slowing down, but because of geopolitics. And that pall hanging over all of the discussions that we keep having, human tragedy, the potential escalation. I just keep thinking about how you wrap your head around that. How do you try to game that out in numbers and nuts and bolts?
We're going to have to see. Right now, futures deteriorate, negative 15 on the S&P futures. We're down 0.4%.
We are getting earnings throughout the morning. We did get Estee Lauder, and they did bring out, revise lower their full year forecast. Interestingly, they said it was because of both the outlook in China and Israel as part of what's weighing on results. Yeah. Kraft Heinz increased their results. The Estee Lauder shares are lower by 13%, excuse me. You could see Kraft Heinz beating expectations, and the shares, they're up, but not as much as you would think. And this is the story of this earnings season.
Well, it's the story of the earnings season, but it also comes down to pricing power. And to me, I go back the day I was off McDonald's. I wasn't here for it, but the answer is McDonald's had massive pricing power over 90 days. Can they continue that? Just anecdotally, anybody go to a grocery store recently? I mean, I'm gonna have to sell one of the children just so we can eat.
It is something that's sort of strange. You go and you buy 5 things and you can pay $150 and you're thinking to yourself, what did I just buy?
Remember that? You go, okay, I got this amount of money. How many bags of grocery did I get? It's like, they're short stacking the grocery bags now to make me feel better.
People feel bad, but then they earn more and then they still spend it. And that's sort of the strange situation. Although some people are saying that McDonald's and Coke are benefiting because people are downshifting rather than eating at other restaurants. Well, are you downshifting to value meal number 3?
I moved my desk here. They moved me about every 6 weeks just to keep me away from people. And I've got a view of the McDonald's on 3rd Avenue.
You just sort of salivate all day thinking like, yes, I could do this.
I can't wait to get to 11:30. I try to get there, but they serve breakfast 24 hours a day. So it's,
the hash browns, it's your favorite
No, I get
thing.
the steak and the,
Steak? What are you talking about? Have you ever been to a McDonald's?
Come on. I mean,
steak, steak and mashed potatoes.
The steak's got jockey whip on it, but that's okay. Amelotti, the 8 o'clock hour. That was my Rodney Dangerfield imitation.
Politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
Will the Fed hold rates steady as expected?
November is dead. Apparently, it's long-lived December.
What the Fed, I think, is trying to do is buy time.
The Fed could well be done.
Trust Bloomberg for the fastest coverage and exclusive analysis.
This will be the 3rd consecutive year of bond losses, which has never happened in history before.
It's simple. The default cycle started.
We're going to be adjusting to events around the world.
The question is, does the real economy slow enough to keep the Fed at bay?
Bloomberg surveillance. The Fed decides. Today on Bloomberg. Context changes everything.
We now stand at a moment where many are again making the bet that we're too divided, we're too distracted at home to stay the course. That's what's at stake with President Biden's national security supplemental funding request. For our adversaries, if we start to peel off pieces of this package, they'll see that, they'll understand that we are playing whack-a-mole while they cooperate increasingly and pose an ever greater threat to our security as well as for that of allies and partners.
The Secretary of State, Antony Blinken, testifying to the Senate yesterday. $105 billion under discussion there, and of course this has been a topic. We'll get to Anne-Marie Horton and Oliver Crook in a moment. On this Fed day, futures deteriorate, -13, now -16, 0.4%. Dow futures down 108 as well. Yields lower. There's a little bit of tension in the tape as well. May I say that given the exhaustion of any administration officials, it was wonderful in the zeitgeist yesterday to see the Secretary of State escorting his cherubs out the door to trick and treat. You know, given his travel schedule, that was great to see.
How do you create normalcy against a backdrop that's anything but? And of course, the Treasury, the Secretary of State is going to be heading back to the Middle East, another whirlwind type of diplomacy, not just in Israel, and arguably, more importantly, to some neighboring states that I believe have not been named yet.
For all of you joining into this story, all I can say is clearly our reporting from Oliver Crook in Tel Aviv is the situation has deteriorated. Joining us as well, Anne-Marie Horton in Washington, our Bloomberg Washington, Chief Washington correspondent. Anne-Marie, I am thunderstruck by the images. How does the Pentagon assist Israel in war, given the imagery that you read in the Washington Post?
Well, it's horrific, especially yesterday when you see that a refugee camp was hit with a number of Israeli airstrikes. One individual, an eyewitness on the ground, told CNN they felt like it was the end of the world. So this is a massive problem in terms of optics and that on one side, and horrific just because of the human tragedy that is unfolding for the world to see happening in Gaza. What you hear this administration constantly say, and we heard it yesterday from Secretary Blinken when he was testifying on the Hill, which, by the way, was interrupted a number of times by protesters, is that Israel has the right to defend themselves. Israel's on this quest to get rid of Hamas, but at the same time, they keep emphasizing that Israel has to abide by humanitarian international rules of war. And that seems challenging right now.
Oliver, the quest, is there a timeline or a horizon of quest here? Is this an action by Israel that's understood to be days, weeks, months, or dare I say years?
This is an action that is understood to be by Israel at least weeks and most probably months. So again, on the officials that we have spoken to with Bloomberg, and trying to get a steer on what they exactly have in mind. They said it could be as short as 6 weeks, it could be as long as 6 months. But as we know, this, as it develops, completely changes dimensions. And then we start to hear also increasingly some of the conversation around the what after that, which is a very difficult conversation to have at any point and probably a very difficult one to have today. But again, even if Israel does succeed in dismantling Hamas, its military infrastructure, its political infrastructure, and the 40-some-odd thousand members that exist within Gaza, the what next is the other big question, Tom. And again, I think it's very challenging to see the path to resolution there. You talk to people here, there's a lot of despair in terms of long-term durable solutions.
And there's a lot of despair in the short term as well. Anne-Marie, what do you think Secretary of State Tony Blinken's goal is as he heads back to the region?
Well, we only know that at this moment he's heading to Israel, and he's also going to be talking to other regional partners, Arab neighbors likely, but we just don't know what stops that entail. Yesterday, when he was speaking in front of Congress, what we did hear from that hearing is that he said that there's about 400 Americans in Gaza, trapped in Gaza, and including their families, it's about 1,000 people. And he says that he is working on this every single day. So I think it's about, for him, top of mind is getting those Americans out of Gaza, working with the Israelis to find out what's next, getting Americans that were taken hostage by Hamas. And then, of course, when he goes to these other countries, the gap is very wide in the public sphere about Arab nations calling for an immediate ceasefire and the U.S. saying that they stand by Israel and their right to defend themselves. What the Arab world views that as is that the United States is giving Benjamin Netanyahu a green light to do what they're doing in Gaza.
In the meantime, we see Iran really playing both sides here are definitely playing some of its proxy militants in neighboring countries. Ali, what's the reception like in Israel about the idea of the Yemen Houthis getting involved, which they said that they were going to be involved and have shot some rockets over? This question around Hezbollah, especially ahead of that Friday speech that we're expecting.
Well, again, there were no shortage before the Houthis got involved of places to worry about, whether it's on the northern border with Lebanon, whether it's on the east with Syria, and then now with the Houthis, and you see more and more projectiles going either up the Red Sea, but also crossing over Saudi Arabia. And again, with this story that Bloomberg put out yesterday, an important story about the 4 Saudi soldiers that were killed last week. And again, these are all the flashpoints that we're watching very, very closely to. And again, and we mentioned this a little bit, but it bears mentioning again, when you see the bombardment, as we did today at the refugee camp, and those headlines get out to the world, get out to the streets, you see the unrest also in the West Bank. And this is, again, the other flashpoint where a number of people have died there, have been killed by Israeli forces as this whole thing has gone down. We've had most of our focus in Gaza, but of course, this is a huge part of the conversation.
Oliver, has the offensive ability of Hamas been taken out? Are they able to launch missiles now?
I think it's been, we heard from the Israeli defense minister, and again, it's very challenging to get good intelligence on what is going on precisely with Hamas, but that they have been severely diminished. I was saying yesterday that since I've been back on Sunday, we haven't heard any air raid sirens. In Tel Aviv, that changed dramatically yesterday. There were a number of air raid sirens. We got a lot of explosions that we heard over the city in central Israel. So again, there is perhaps a slower cadence in terms of these rocket launches. Their capacities are to a degree diminished, but again, there's still the capacity to surprise.
Emery, when you take a step back and you speak with U.S. officials, how much concern is there that Israel may win the war it is waging, but it will lose a lot more in terms of public relations and ability to mend relations with neighboring countries afterwards? How hardline are people getting on both sides as this progresses?
Well, I think right now what you do see when you see images of this refugee camp, say, getting hit with a number of Israeli airstrikes, you heard the Israeli military come out and say that this was a key part of the infrastructure for Hamas. But we do know, we've known this really, there was a ton of reporting done in 2014 about how much Hamas uses civilians as human shields. And that's what makes this job for Israel so difficult as they try to get rid of Hamas. But when it comes to this normalization, say an extension of the Abraham Accords, this at the moment is going to be incredibly challenging. But long term, it is still in the national interest of Israel and many other Arab countries, even Saudi Arabia, to want to have a normalization with Israel. Maybe even more now, but optically, those meetings are obviously stopping at the moment.
In Washington, Anne-Marie Horton. In Tel Aviv, Oliver Crook. Futures, they deteriorate into the market opening here. I'm watching the banking stocks, as I mentioned, front and center. I play off the Keefe, Bruyette, and Woods. There's also a secondary, I think it's called a Tier 2 or Level 2 Standard & Poor's Index I look at as well. I do not look at the Dow Jones Industrial Average to give me bank stock dynamics and that, but, you know,
it's going to be curious as we get earnings to see whether we continue to get this type of disappointment in terms of the performance.
And the forward look.
And the forward look, which hasn't been so positive. The overhang, though, it's really important to say of what Ali and Anne-Marie were saying. Really, in the forefront, what I find interesting is oil prices have not been higher. And there's one theory out there that the reason why is because demand isn't necessarily there. Otherwise, oil prices would be a lot higher in response to this.
Energy having a very tough October of it as well. This is November 1. Later this morning, the ISM numbers. John Farrell will have complete coverage. Coming up next from Wells Fargo, Michael Schumacher. It is Fed Day. Stay with us through the day.
this story did come around as something that's a bit different, there is a dark side to it.
It's hard to even talk to people about these chemicals and tell them, look, there's a chemical that's in you that's not found anywhere in nature.
We've all been used as guinea pigs for the last 70 to 80 years. We weren't told we were being exposed, but they did it anyway.
This right here is the shadow fleet. To actually see clandestine behavior was really surprising. That makes you think, well, what else is going on?
A lot of people let Agnes down. What she was told is exactly what happened to her.
It took the lid off a much bigger problem. I think that's probably the most shocking part of this whole thing.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Bloomberg Surveillance, good morning, everyone. Midway through a good early morning effort for you with a lot of good guests. Michael Schumacher coming up, which will be timely from Wells Fargo. Futures deteriorate, negative 13 earlier, now negative 18, down 0.4%. Pretty much the same, negative 0.4%, make it 0.5%. On the NASDAQ 100, the VIX doesn't give me any love yet. We'll see where that ends up soon. 5.06% on the 2-year, in 3 basis points on the 10-year yield, 4.90%. One of the stories here we really need to talk about, West Texas Intermediate 82.40. It did not go to a 79 handle, but oil really giving it back here with dollar strength out near 107 on DXY. Yen is in the headlines. I'm not going to do it now. But the answer is weaker yen and a lot of discussion about what Japanese authorities will do on the flow of bonds. Mohamed El-Arian out with a really good tweet on that as well. Let's get to under surveillance, and we're going to finish strong on under surveillance. Katie Greifeld caught up and said, Tom, you're ignoring BitDog at 35,000. So we'll do it here, Katie, in a moment. What do you got?
We'll sort of do it. Let's get started. Under surveillance this morning, people seen exiting Gaza via the Egyptian border for the first time since Israel began its ground invasion. This according to Arab television channels. This is U.S. Secretary of State Antony Blinken is set to head back to Israel. This is we were talking about with Anne-Marie Hordern. After dozens were reported killed at a Gaza refugee camp, Israel's military saying it targeted Hamas infrastructure in the area and killed a senior leader of the organization. But Tom, what we do have this morning is another story out in the Bloomberg saying that quiet pressure is building in the U.S. to try to restrain some of what Israel is doing to save lives and to prevent this type of casualty count among civilians.
Into the reporting of Ethan Bronner and our team in Tel Aviv, I wonder what the quiet pressures, plural, are within domestic Israeli politics. That's something that we really haven't dived into.
And they are percolating to the surface, very much so, very much front and center. In about an hour time, the government's quarterly Treasury refunding plan is due at 8:30 a.m. Eastern. Traders broadly expecting $114 billion in refunding. This coming ahead of the Fed decision at 2 p.m. We're going to have the Fed special. I love the commentary.
Stop the show. Stop the show. Why does this refunding matter?
This time, people are worried about supply. In the past, it was just understood there would be plenty of buyers, whether it was the bank, People's Bank of China, whether it was Japanese investors, whether
it was retail in America showing up as well. Don't underplay that.
They are still showing up, but they're demanding to get paid. People are worried about the ability to suck up such an incredible amount of issuance, particularly on the long end. If the Fed gives a reprieve, gives a free pass to the bond market, it'll come out and say it's not issuing just as much as people expected on the long end. That's what I think.
We'll have to see.
All right, closing arguments, meanwhile, expected at the end of this week as a trial against FTX co-founder Sam Bankman-Fried comes to an end. The former crypto mogul testifying in his own defense after former colleagues took the stand against him. Bankman-Fried faces what could amount to life in prison for his alleged role in one of the largest financial crimes in history. Honestly, Tom, I have to be honest, this to me is not Bitcoin, or BitDog as you call it, right?
Yeah.
This is something different. This is a nuts and bolts kind of, what a lot of people would say fraud.
Out on YouTube and a bunch of other platforms as well is ruin. The violence of this hour and a half, ruin on what was happening when we were all shocked by this, including right at the beginning of it. They have images there of like Tom Brady telling you and others saying, buy Bitcoin. But this is a violent 1 hour. I can't say enough about what they did with Zeke Fox's book. Ruin is the show. It's a Bloomberg Originals, and the book is Number Go Up, which I think every prosecution attorney at the trial has held up and said, hey, it's in this book, stupid.
Yeah, this
I'm paraphrasing
evidence that they have admitted to the evidence sphere.
Well, we'll have to see on that as well. Right now, we continue with our Fed Day coverage and a brief towards our show at 1:30. Michael Schumacher joins Global Head of Macro Strategy at Wells Fargo. Michael, I love what you say of the distinction of yields moving ever higher versus finally leveling out. What is that distinction between yields that have said enough, but we're going to stay here, versus that fear of price down, yield up?
Yeah, it's been really interesting, Tom, and I think Lisa hit a great point with respect to supply. The supply specter hanging over the market has made people afraid to buy. And if Treasury dials that back a little bit today, and if the Fed is not super hawkish, investors might say, okay, I'm not going to get clobbered. I won't come in and buy and have yields go up 50 basis points in a month. But I haven't talked to anybody in quite some time who's super keen to put on long positions right now. So that fear seems to be subsiding a bit, but that big bullish appetite for bonds, just not there.
Into this meeting this afternoon, what is the state of our commercial banking system? And of course, there with the bolt-on of a readjustment of balance sheets in commercial real estate.
Yeah, as far as the big banks go, I'll leave that to Mike Mayo. He'll tell you they're well capitalized, no issues. With respect to the, call it, mid-sized banks, regional banks, I think the issue there with respect to CRE, and a number of my colleagues at Wells have talked about this, is that if you go bank by bank, the exposures simply aren't that big on an institution basis. So not systemic. You might see some noise for a particular name, but not going to send the economy toppling.
Is this a unified Fed? We haven't even brought this up this morning. I've been remiss on that. Mike Schumacher, do you see dissent in the Fed meeting today?
I think dissent is going to happen very soon, Tom. And when you think about the various members of the FOMC, got a number of new appointees, almost certainly lean dovish. Jay Powell's got a very different motivation. He wants to go down. Volcker's out, but at least not Arthur Burns. Doesn't want to be the anti-hero. So he wants to make sure that's not his legacy. So Powell's motivation, keep rates high, squelch inflation. Others might say, hey, done a lot of good work. You know the story. Inflation's down. People are hurting. Let's back off a little bit. That discussion's going to get tougher and tougher. Does it lead to an outright dissent today? I doubt it. Does it lead to a dissent pretty soon, formally? We think that's pretty likely over the next few meetings.
Let's take a step back for a minute, Mike, and talk about how pivotal this week has been and will be looked back upon as having been. You came into this year and you have been talking about being bullish on longer-term bonds. It has been a painful period for that kind of idea, although a lot of people say it is a bet deferred or delayed, not necessarily thrown off completely. What stands out to you as we get economic data that surprises to the upside, potential idea of supply, and a Fed decision that's basically going to be, we'll see?
Yeah, it's interesting, Lisa. So it feels like a year. We've actually only been bullish for 3 months, but I think I've aged about a year's worth during that time, hence the gray hair. But as far as this pivotal week, it's been very interesting with respect to a few things. Bank of Japan, I think, stands out. Getting a little bit more tolerant of yields rising. Intervention seems very likely to happen over the next few days, potentially tomorrow post-Fed. So that's a big thing. If we see from Treasury at 8:30 today that the supply tide maybe is crested or at least is not going to become a tsunami, that's a big positive for the market. Those things could stand out. As far as the Fed, that's probably the least notable commentary we're going to get this week, in my opinion.
So
Jay Powell, we know, is going to play it pretty well down the middle. Not too exciting.
So let's talk about what you think potentially could have the biggest ramification. We were talking about the refunding agreement. If you see the other side and an increase that is greater than expected in terms of longer-term bond sales, does that make you suddenly much more bearish, much more reluctant to reinstate some sort of bullish feel in bonds?
Yes, it does. So if Treasury comes out and says, hey, we know yields went up a lot during early August after our last announcement. We don't care, frankly, because we have to fund this massive deficit. We need to get cracking on that. We're going to increase issuance even more than you expect. That makes us negative at that point. So you could see a sell-off, I think, in 10 and 30-year treasuries of 15, 20, perhaps even more basis points. If issuance comes out, let's say, consensus is 3 for the 10-year. If they bump it up to 4, that's a very bad day for treasuries.
Explain that again, Michael. I think there's a lot of people listening to you that's Greek there as well. When you say from 3 to 4, what are you talking about?
Yeah, it's a good point, Tom. So it's a lot of bond market technical jargon here, but Treasury does the auctions, and Treasury talks about the refunding, so the quarterly move in terms of 3-year, 10-year, 30-year treasuries. We're talking about the increase in the size of the 10-year Treasury auction this month versus 3 months ago. So the market expects an extra $3 billion.
Right.
We think it's going to be 2. If it comes out 4, that's a lot. It might seem like it's quibbling,
right,
but it's really the message. And the message is Treasury, in that case, would say, we're going to go big, we're going early, get ready, just deal with it.
They were beautifully explained. Mike Schumacher, if that's the case, and there's always this folks, will the Chinese show up? Will the Japanese show up? Do mom and pop show up? Do we still buy bills, notes, and bonds for our retirements?
Mom and pop have been showing up, Tom. They've been moving a lot more money into bonds in the last few months than they had previously. So I think in particular, when you look at very short-term yields, T-bills 5+, very straightforward. You get some good tax benefits in a lot of states, very attractive. Where mom and pop are going to get a bit more queasy is buying the very long stuff because there's significant market risk. But going out to 2-3 years, that's pretty palatable. So I do think retail investors show up, especially on the front end.
Mike, if we do get an upside surprise to the total amount of longer-term debt that the U.S. government decides to sell over the next quarter, what's the ramification for stocks that have otherwise, I don't know, been maybe responding to the volatility in treasuries, but not in the same kind of predictable ways to the level?
Probably a negative, I would say, Lisa, for risk in general, and certainly would extend that to stocks as well. So the idea there, again, is that if the message from Treasury is we've got a lot more to do, it's going to send yields higher, it's probably not a good thing for some of the high PE stocks in particular that have been driving the market. So I would take that as a negative.
Yeah. Mike Schumacher, thank you for the brief and particularly really nice explanation there of why Mike McKee cares about this important refunding announcement. We see that in less than 1 hour. All of a sudden, it's like drama. I'm interested.
It is going to be important.
Someday I'll actually care about the auctions.
Wow, I look forward to that day. They've been interesting. Tom, you should care. They really matter. They've been messy.
Read the minutes.
They have really driven a lot of the market activity.
Will the foreigners show up? Let's go as jingoistic as we can. The great fear here is they won't show up, right?
They haven't been showing up as much. It really has been shifting back to a domestic buyer base. How much can domestic buyers buy? And what's the price? And we're talking domestic buyers, including the biggest banks that already have portfolios of treasuries on their books that they can't liquidate. So this is also a big buyer, not to mention the Federal Reserve.
For those of you on radio, I mean, we just ought to set this up with bowls of, like Wheaties and, milk and some lousy coffee here. I mean, it's like I'm sitting across the breakfast table from Bramo and she's lecturing me. I mean, it's just like, I'll pay attention. I promise. Futures deteriorate, -18, down 0.4%.
I do think this week was really relevant in a lot of levels. And, if you don't want to pay attention to the auctions, by all means, do not pay attention to them. I'm just saying, I think the rest of the market has in a new way. And bonds that used to be sort of the staid asset class have become the flashpoint of volatility, leverage from hedge funds, and, much more action than even in stocks.
Can I just say, and, you were going on with Michael Schumacher there, and Norwegian Cruise Lines, which what do I know about? You take it, Pharaoh's looking at it for a cruise off Italy, like he goes out of Rome and sips espresso.
Oh, yeah,
but
big cruise.
he was on a cruise here before, I think down south. And I just don't get the business. And then I looked at the income statement, and they're, of course, hammered in COVID, and revenues have really come back. But it's like the airlines. Is there a profit to be made here?
Well, and just, you know, an even bigger point, I'm glad that you brought up the airlines. Are people sick of traveling? Are people ready to go back to some sort of normalcy after, you know, the revenge travel that we saw, the revenge spending on services, but in particular, experiences that we saw over the past 18 months?
I mean, I look at this, and to be clear, folks, the revenue recovery of travel has been great. But somebody tell me where the profit is. I just don't, I'm looking. Norwegian Cruise, I mean, we got the chart up. For those of you on radio, okay, it's had a moldy year. It's back to COVID pricing, essentially.
People pay a lot for those. I mean, have you been on a cruise?
I have never been on the kind that John goes on.
Yeah.
I've never been on.
Where you've had, you know, entertainment, you sit on a deck chair.
Well, you know, I went down and saw John over the weekend. Just I missed him so much, and I get so seasick. They put me down with a band down by the bilge. You know, there were no windows.
That's definitely a way to get over seasickness, for sure.
It's Fed Day. Stay with us.
Josh, that's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Like, please, like, really actually tune in. I desperately need an audience.
The top names at the Fed are on Bloomberg.
The economy is handling much higher rates, at least for now, without difficulty. So notionally, that might tell you that the neutral rate has risen, or it may just tell you that we haven't had rates high enough for long enough.
The bond market has tightened quite considerably. If financial conditions are sufficiently tight, our work is not necessary because we don't need to boost them more.
Nobody covers the Fed like Bloomberg. Context changes everything.
No one's expecting the Fed to hike rates this week. The best way to move forward for the Fed tomorrow is to actually remain relatively hawkish in its wording, because they need to keep an eye on inflation expectations.
Sonia Martin of DZ Bank, Frankfurt, FX and monetary policy there. Nice conversation yesterday with a view on, really a global international economic perspective. Lisa and I distracted right now. We're going to get right to this, and you get lucky. What you do is you make your luck on surveillance, where we book a world-class guest like Win Thin of Brown Brothers Harriman, and we do that when a research note lands that we never know is coming. And we have a blistering note on Fed Day from George Saravelos of Deutsche Bank, and blistering is the only operative word. Futures -20. The market deteriorates here, looking at the real yield 2.48%, and I'm going to get a DXY here of 107, yen 151.20, euro yen, Lisa 159.42 weak. yen.
Okay, so you mentioned the George Zaravelos note. Let's tell you what it actually says. That basically compares the Japanese yen to the Turkish lira and the Argentinian peso, saying that the Japanese officials are wasting money, throwing good money after bad by trying to come in and buy bonds or intervene in the FX market at a time where it's just other events that are going to drive this. And this is the conundrum. What are Japanese authorities willing or able to do to stem the tide if something breaks where things get out of their control?
In reflation here, and academically, reflation is sort of a mystery. Mr. Saravello cites a laureate, Paul Krugman, of saying, hey, you got to reflate, which clearly is what they've been doing. And George's point is, okay, now what? And the now what has got to be to work towards a strong yen reaction.
There is a profound question underpinning Japan right now, which is how do you move away from a controlled market that was never a market, at least over the past couple of years with yield curve control, where the Japanese government owns a significant part of all outstanding debt? How do you release it into the wild of free float at a time without anything breaking and without any sudden moves?
It sets us nicely here on Fed Day to the incredibly strong dollar we've seen even since the September meeting. Joining us, Dr. Win Thin, Global Head of Currency Strategy at Brown Brothers Harriman. Win Thin, you were at the altar of Robert Mundell at Columbia, who invented our international currency dynamics. Is there a theory to what Japan is doing, or are they making up original theory?
Well, first of all, thanks. As always, a pleasure to appear here with you guys. To me, it's an experiment. It's an ongoing experiment. You know, Japan's been fighting deflation for decades, and they've thrown everything at the wall to see what sticks. The latest iteration was negative rates and yield curve control. And by hook or by crook, it's finally getting out of deflation. It's obviously the policymakers are very nervous. They're starting these policies is the easy part. Getting out of them is always the hard part. We saw the Fed struggle with getting out of QE back after the great financial crisis. So what we've been seeing unfold really over the last year is just a really haphazard, sort of, again, throwing stuff at the wall to see what works. It's been, again, more out of fear and concern than anything else. They don't want to upset the apple cart. The recovery is by many measures, quite modest and vulnerable. And so that's what we're seeing. I do think that Japan will exit accommodations fully in early 2025, and by that I mean a rate hike.
Why should our viewers and listeners care in the Western world? It just seems to be removed over there. For example, comparing the yuan, the renminbi in China, to Japanese yen, even with weak yuan versus the dollar, it's stunning how weak the Japanese yen is versus renminbi. Why do I care in America?
Well, I think as you guys pointed out just earlier in the segment, Japanese investors have been basically leaving Japan and chasing yield and returns elsewhere. And that's because of the zero rate interest policy and yield control. Domestic yields aren't attractive enough. So we've seen massive capital outflows from Japan over the last years, if not decades. If we get to that inflection point where things change and actually rates are allowed to sort of go back to market-based levels, I think the fear, at least in Japan and others, is that that wave of capital will come back and we're crashing back. We've already seen announcements from some of the Japanese life insurers that they plan in the second half of this fiscal year to underweight foreign investments, foreign bonds, and overweight JGBs in anticipation of normalization. So there's all sorts of capital flow stories that I think, coming at a time when we don't know what the Fed's doing, we don't know what's going on in Europe with the Middle East. It's just another sort of added uncertainty that markets have to digest. And I think that's what I think investors in general are worried about.
It's almost deliberate ambiguity. Is deliberate ambiguity by the Bank of Japan going to actually create some sort of soft, gradual increase in yields and some sort of controlled departure from yield curve control?
Yeah, at least I think that's what we're seeing. I mean, in fact, in my opinion, yield curve control is dead. It's deader than Elvis right now. As far as I can tell, they've introduced this ambiguity where it's now 1% is now a reference point. Who knows what that means? So the market will prod and test the Bank of Japan, not just on yields, but also on the dollar yen. And it's going to be a cat and mouse game. But really, for all intents and purposes, JGB yields are going up. They have been going up. They will continue to go up. We'll go above that 1% sort of reference point within days. And the upside, I think maybe 125, 150 is sort of a natural sort of target for the markets. Where we go from there will depend on what's going on in other global markets, especially U.S. Treasuries. But again, this is normal. This is, we've been it's very, what I would say, an abnormal period, and it's been going on for decades in Japan, of zero rates, negative rates, year of control, and it's abnormal. And I think that they're trying to exit that, but are obviously very, very scared of the ramifications.
Lisa, moments ago, the DXY unraveling right now, 106.91. We're really buttressed up here against a 107 on DXY, and it's clearly led by yen dynamics. And this goes like the banking stocks. I'm sorry, you just have to look at the Bloomberg screen, and it's screaming a certain level of tension out there this morning without being, a toxic brew of gloom. I mean, it's just the markets are speaking before this Fed meeting, and it's not all the managed message of the elites.
When, to that point, how disruptive is the fact that the dollar has continued to strengthen and not weaken as so many people thought this year?
Well, for the U.S., it's good because a stronger currency helps to limit imported inflation. What we're seeing particularly stressed is with emerging markets, especially in Asia, that's being double whammied by the yen and by the dollar. But basically, we've seen many, many emerging market central banks intervene to help support their own currencies. We've seen surprise rate hikes. We saw that from Indonesia last month. And we've also seen countries that are cutting rates slow their easing because the currencies are coming under pressure. So to me, it's really a toxic brew for emerging markets. That is, tight monetary conditions in the U.S., slowing global growth, slowing China, and easing cycles in emerging markets. And that's all, to me, a very toxic brew for emerging market currencies.
You should have seen Tom Keene's face when you said toxic brew. His ears perked up, and he was fully engaged.
That's what Robert Mundell used to say. Robert Mundell would be in a lecture, and he'd say, look, the Mundell triangulation, and particularly on unified currency, it's one big toxic brew.
This is a difficult time because people have been throwing around words like toxic brew for quite a while, and yet we have been in a sort of uneasy equilibrium all year that's really been capped off by U.S. dynamism. You go, what do you mean, Tom?
I don't think it's been an uneasy equilibrium. I think the markets are talking here. I'm going back and forth with Doug Cass here on the banks. You can rationalize this all you want. Yen 150 was why we're talking to win thin.
So Win, weigh in on that. Are things breaking down in a more material way that'll lead to more dramatic moves in FX?
Well, I think the main driver that's really, I think, taking everyone by surprise is just the continued strength of the U.S. economy. And by that extension, the U.S. dollar, the Fed, and all that. I'm of the opinion that the Fed will probably get us into a recession next year, but I don't look for anything, quote unquote, break. By break, we mean like a financial crisis, a banking crisis of some sort. We had a scare back in March with SVB, but we found that was, to me, an idiosyncratic situation with SVB and Signature. So to me, all the stress tests suggest that the global financial system remains fairly resilient. Now, look, we all know that doesn't mean a whole lot when push comes to shove. But I do think that we are sort of in this post-Great financial crisis situation where, yes, the institutions and overseers and regulators are all sort of on the same page and hopefully willing and able to head off a crisis. Now, we'll see pockets of stress. We've had frontier markets blowing up. Emerging markets will continue to remain under stress. Look, UK, Europe are into recession, but, nothing sort of broken. This is sort of a normal thing. I guess I'll leave this, with the final thought is that this is a normal sort of situation in terms of downturn. We're going too fast here in the U.S. Fed's hiking. We're going to slow. We maybe go into recession, but then the whole cycle starts over again. It's not something to worry about.
Got to leave it there. Dr. Thin, thank you so much. He's with Brown Brothers Harriman. Futures -20, Dow futures -128, the VIX 18.40. Again, Fed Day. Priya Misra with us as we look to the Fed at 2 o'clock. Good morning.
Let's suppose you're on a plane and somebody realizes who you are. They say, I have $100,000. I don't know what to do with it. Where should I invest it? Where should they put their money?
So today, it's a easier decision than it was maybe 2 years ago because Treasury bills are 5%. So I would say, regardless of how much risk you want to take, you have to put a portion there. Then you would have to ask, really, an individual is the same, I think, as any institution. What is your time frame? Do you need to get access to this $100,000 in the next few weeks, the next few months, the next few years, not until you retire? And that will determine your investment decision.
So what do you think is the most common mistake investors make when they have 100,000, $1 million, or whatever they might have? What is the most common mistake you have observed that investors make?
I would say hubris and thinking you know more than you do, because every decision that you make has many, many layers. So as you're creating a portfolio, look at the risk as well, not just excited about the return.
And what's the best investment advice anybody's ever given to you?
Continue to learn about innovation in whatever you do, because that is where it's not exciting, that's where returns will go.
I think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Access the financial world